Okay. What a day. What a day, what a day, what a day, what a day, what a day. Mm-hmm. That's already looking like crap. Jeez. Oh my gosh. This is not a real rally. Oh man. That's garbage. All right. Let's see. All right. European markets are rallying. That makes sense. We got banks earnings season. That's another big piece of news. Well, banks. Banks are going to be very, very important in the midst of a potential recessionary period. So it'd be definitely wise to pay attention to banks. I gotta be honest, man. How are you? Not good. I mean, I'm giving myself as much grace as I can, but this has been a really rough 2 months. I peaked kind of with the market on that hook back in February, and it was about exactly 2 months ago. And my account, way too heavy growth stocks, and it just got obliterated. I mean, absolutely obliterated. I tried my best to get out of some things on rebounds, especially back in March. I knew it was going to go up into March, but nothing kind of made it to where I wanted it to go, which is a dumb way to do the market. You should just take what you get. And yeah, that's all there is to it. I mean, I don't want to say I'm wiped out, but it went from kind of euphoria and like a really good trading for about a month. And it wasn't even all upside. I mean, I had done really well. It's the regularity of the market and the lack of experience trading in a bear market environment. It's that simple, you know? Because like under normal circumstances, a 7.5% pop would give you some returns, right? Like a 7.5 jump, 8% jump on Tesla should give you something, right? Wrong. Evidently, in this bear market, it's just a chance for bears to load back up. There was zero increase. In fact, my calls actually decreased. You know, and that makes sense with the SOW that happened, that there was a bit of a weakness there. And I knew that was going to happen, and it was probably going to come back down. I had imagined it would have stopped earlier. It did not. So we're just going back and filling a gap now. But it's frankly, it's below the creek. So, I mean, we elevated enough that, and it's a huge, arc. So it's probably going to have a decent reaction back up. But probably back to like this floor here. But it's just awful. Like, I don't know how to explain it. When we went down in 2022, I felt like a lot more confident in trading the downside and like moving positions around because the regularity in the market meant that up was up and down was down. Right now, everything is flipped on its head. I mean, it's just completely backwards. And really, unless you're just loading up on bear positions, like constantly on all these pumps, which tells me, the market already thinks we're in a bear market. I mean, yeah, there's some stocks that are worse than others, but I mean, I got no return overnight. I woke up this morning, and I'm not complaining. I'm just saying, like, it is what it is. I can't control it. I don't control what happens in the options chain. Obviously, you're just along for the ride, But in a regular market condition, 8.5% on a, and that's insane. Like 8.5% move should be producing something. But it produced nothing. It actually went backwards, which I'm just baffled by. And it just shows that nobody is convinced that the price, should be going up. I mean, everything's based on bid and ask, and so if you're seeing it move in reverse, you're literally seeing desperation. Like people are thinking this is so bad that I have to drop the price in order to sell these positions, and that's not good. I mean, that's a really bad place to be. Is it all doom and gloom today? No. Technically, this is a breakout. This is definitely a breakout. And I think that what we're going to see is that this looks eerily similar to what's happening, but it's a lot lower. And part of the reason I think that it's a lot lower, again, is because it was hiked up in extended trading hours and not during regular trading hours. If you had gotten this full move, the full breadth of this move in regular trading hours, I think you would have seen an increase like we did here on this pop. It was a pretty decent, like 50% increase at least on some of those option contracts, but here there was nothing. And really, like if you look at the percentages, it's like, what's the difference? Well, volatility stayed high and, just didn't budge. And so there's a big issue here with all that, in my opinion. I'm like, it looks kind of like a mess. But again, it's not all doom and gloom. I don't know for sure about SPY. I'll have to double check on it. I'm going to assume, based on what I'm looking at right now, which is Tesla, that it's probably pretty similar. And by the way, you guys are probably like, well, that's your problem, Booksy. You shouldn't be trading Tesla. I know that it's volatile. I know that it's dangerous right now. I know that that's not a very popular position right now. I get it. But again, it's a matter of what's the market doing behind the curtain, right? And there's certainly very little, if any, confidence in the market. So any kind of a rally that we see at this point, I'm highly skeptical, highly skeptical. And then in addition to that, it's really important to just kind of step back and look at the big picture. So yeah, I mean, in theory, yesterday I had drawn out this like 50-50 business, and it looks right. It looks like it kind of went there. But at the same time, we've got to deal with just kind of the basics, and the basics here are a breakout of a widening. And so if this widening breakout holds a higher low, it may be a really deep sell-off, but if it holds, right? If it doesn't, then you're really in a massive sell-down period, and this is just a big old head fake, which frankly, I'm not sure what it would accomplish because nobody was buying option contracts here, so I don't really know what the point is. Like, pumping it up did nothing for buyers. So I'm like kind of like, well, why would that even matter then? It really was just for sellers to reload some positions, and the buyers basically got nothing out of it. I mean, it was just nothing. And it doesn't make sense to me because, again, this is a widening breakout, and a widening breakout almost always signifies a target of the top where this widening began. And in this case, there's a 618 retracement, and there's also a fib extension that leads you back up in this example, okay? And we're going to get to everything else. Don't worry if you're like, I don't give a crap about Tesla. That's fine. But it's still, I think any stock you look at right now is kind of similar. This should be like a metric for a recovery back into this Wednesday. And my thought was that we're kind of on a rinse and repeat. It really looks exactly the same as the breakdown that happened here, minus one little factor now. And that factor is that we didn't actually breach this other guy. And this is a long-term creek that has not held any kind of breakout. So this goes back from January 31st through February 19th. It's essentially a cat ear drop right there. There's a higher creek that's far more elevated that would suggest that, I think it suggests that Tesla wanted to get back to 300, but it's not, probably, we're going to see if it's based on the news, but it's very difficult to make the argument it's going to definitely happen at this point. Instead, we have what appears to me, and it looks like we're struggling right now, But it appears to me to be this massive retracement to fill this gap and then go back and check this creek. And so if it holds, in theory, this is now like a widening. You could get a breakout that heads back up to 262. And what I told the Discord group, for example, was that this looked kind of bad. And you can see why. It's that curve, right? And usually that needs a sharp drop before a bounce. I'm getting kind of sick and tired of extended trading hours. I'm thinking that I looked at IWM recently, and almost every single one of those small cap moves, like the big small cap moves, happened in extended trading hours in the last 2 months. And it's really been screwing with my positions and kind of done with it, to be honest. I was like looking at it and I thought, well, I mean, there's really no silver lining here. Like the best trades were overnight trades. And I mean, you can't really tell. This is the IWM right here, the Russell 2000. And it's hard to tell maybe with extended hours on because you're looking at it like, oh, there's no gaps there, right? But there are. And if you look at the major moves, they're almost all like exclusively like, this is a major move, all in extended hours. This is a major move, all in extended hours. This is a major move, all in extended hours. This up and down is a major move, all in extended hours. When you start looking at those big bars, they're all in extended hours. This right here, all this upside, extended hours. All this downside, extended hours. Literally, like all of the ups and downs are just in extended trading hours. And I'm getting so frustrated with it because I'm like getting into these positions thinking that, you know, I've got these targets in mind, and then you don't get to see like the actual breakdown. It's happening, like the up thrust here happened, you know, in like extended trading hours. And it's like, you can't trade it. It's untradeable if you can't trade extended trading hours. It's just not possible. And so the whole game appears to me at this point to be just a huge, you know, effort to kind of rob people. And you guys are like, yeah, duh, that's the stock market book, so you should know better. Yeah, I know, but it's been like this pretty much since February. And I didn't feel that way about a year ago trading IWM to the upside, for example, or just even when it was like chopping at like 200 the last time it was down here, which is, again, a while ago, feeling like I was not able to capitalize on the moves. Now, we have had obviously downside days. There have been huge downside days. But on the whole, like, what's more frustrating to me is not the moves themselves. Like, you may think that I'm like really upset that this dropped down, but I'm not, because yeah, I thought it might go up, but at the same time, I had long-term targets that were pointing really low, and this is fairly universally true. If you go look at some of my charts, that there were definitely potential to go up into March, but then we would probably come back down if it didn't have a rally on that April deadline. And I even have it here still. This is pretty much the same chart that I had before. This is really the only difference, is like I thought there would be like a bigger, more extended hook to the upside here and then drop low. And so I know that the market is saying, like, everybody's saying like, oh, it's unprecedented, like it wasn't. But I don't think so. I think it's, and I'm just going to give my opinion about it, and we'll move on from that. But I think that a lot of this is already baked into the ideas behind what was going to happen to begin with. It's just accelerated, like a lot. So the big news yesterday was the S&P 500 bore itself down into oversold territory. And then there was this multi-trillion-dollar fake out, which killed the market. It made volatility go sky high. And it was because this dude he was a Pat something or other, I don't remember. He, if you don't know what happened, and I'm sure most of you do, he had said that there may be maybe Trump will give a 90-day. I read the interview before this actually happened. So I read it the day before. So what's confusing to me is somebody picked that up from the media and quite literally turned it into a headline that then went around. Now, he said something like, oh, my bad, or whatever. I guess that's not what Trump wants to do, because Trump responded, no, we don't even have that on our docket. But what doesn't make any sense was that they posited it, they brought it forward to the public as, this really is manipulation, and whether or not they did it on purpose, we could argue about that. But they brought it forward to the public and said, he's thinking about, or he's mulling it over, there may be a 90-day extension. He never said that. And it was this guy who is some billionaire dude who gave him money during his campaign. And he said that he thought that Trump might do that. He never said that Trump was doing it. So just to give him some credit, I read that news article before this happened. It was posted the day before. It was just a small little blurb. And he said maybe Trump will give like a 90-day window. I think that would be wise. And then for some reason it was posted, and it's literally like a fake news article. And it caused a huge amount of influx all at once. But let's look at it from a technical standpoint, shall we? Because while the news itself certainly can drive some of that, and I think it does, from a technical standpoint, do I look at this and think that that was 100% news-driven? No. In fact, I think it was just an excuse, which kind of makes me wonder about the quality of it. Maybe it really was something that was intentionally manipulative, which I don't usually say. You guys know that I typically ignore those thoughts because I think that it's not very productive to get all kinds of, and it's not, to get all kinds of like tinfoil hat. But the fact is very, very clear to me. This is the trend we hit. We hit it like within 15 cents. It goes back to May 20th, a year ago. Basically, a little bit more than a year ago. If we're really looking at the April timeline, we're really looking at April 18th. That's where we are, same period. We hit this, what I would call a sign of weakness, because this widening, we've talked about this before. When you see this kind of widening before a breakout, it doesn't necessarily mean it's going to go there, but this has happened before. In fact, this is the exact same thing that happened before COVID. And it's not surprising that the market chose that as a relatively local bottom. When you look back at what happened in COVID, again, you might suspect that there's some foul play there in some ways. I see it more as like a technical level. I don't see it as like necessarily foul play. But it's pretty hard to argue that this wasn't somehow like baked in. This idea of like, we're going to come back to these levels. And ultimately, we never even hit those lows in COVID. We got pretty close and then rebounded. And it got very wildly oversold. Anytime you see that and you see this is what's called an SOW. And I've said it before, a sign of weakness. If you're building out a range, okay? Now, some people are going to look at it and say, well, no, it's a spring. Let me tell you why it's not necessarily a spring. Okay, and even though it's a really long distribution that ultimately goes way, 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 way up, let me show you exactly what I'm talking about here, okay? Because we're going to see something kind of similar right now, I think, and we need to be kind of aware of what to watch out for. If there's any kind of a rally, you don't want to get stuck in like a sucker's rally before bottom's actually in. And I think that that's very possible right now. I see a lot of people, it's kind of mixed. There's like half the news articles that are out from quote unquote analysts are saying that, hey, the bottom might be in. Half of them are saying, no, there's more pain to come. To me, the volume is spiking quite nicely, even though I'm not really a huge fan of the downside. It's spiking quite nicely, but there's a high probability that this is not over until you get down to the previous top at like 450. And so there's going to be a potential, though, here for a rally for a couple of reasons, okay? Because, number one, there's a huge backup that hasn't happened, and it really doesn't make a lot of sense to go down further until we go back up again. That doesn't make sense to some people, but I don't really care. I don't need to explain it every single time, but that hook serves a purpose for the bears, and it is the same as a backup for bulls. Once you get an SOS and a backup, you need to back up to the creek in order to regain support and demonstrate basically that the liquidity shelf has been raised, right? You can take off for a while, but you're not demonstrating that that shelf is raised until you go back down and the water is up, right? The same thing applies to the bears. And there's definitely a potential here for a big rally moment on the S&P that ultimately falls very flat. And it's still going to have downside. So here we go. When you look back at what happened leading up 2018 and then 2020, okay, this is why this is considered, in my opinion, but also I think from a technical perspective, you would consider this a SOW, okay? So on the one hand, someone might look at this and suggest, well, it just came back up to this previous level, right? But here's what it did first. First, it goes above the top of the range and it distributes, okay? Now, does that necessarily mean that it's going to be every single time that it's going to be bearish? No, you can't use that by itself. But this is a typical sign, early sign of strength, but it's also like most people look at that and they think, oh, it's going to go higher. They're not wrong. It does go higher. The problem is that after going up top, it immediately comes down and makes a new low. And I put this box up specifically to show you why that's problematic. It's not just that, oh yeah, there's a head and shoulder, blah, 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 blah. And there's other things going on in the market, that might cause this downside. Of course there are. It's because it drops beneath 50% of the range and it did not hold the creeks that it needed to hold. An SOS with a backup would not have fallen below this creek right here. And you can see that this creek is no joke. Like this ultimately is used later when it's taking off April 8th, 2020 after the COVID drop. So this is not like a little like kind of unimportant thing to understand. When you go below it, this right here was another SOW. Like it's showing its teeth right here that there's some problem, that there's no stopping power. Not only that, but you have a higher low, or excuse me, you have a lower low as well. So there's like multiple issues going on right here, right? Now some might say, well, why couldn't it just go back up? I don't think it would have mattered. I think if it had gone back up, and I don't know how this would have looked, but I think it would have just been like a UTAD, like an upthrust after distribution, which still happens. There's multiple upthrusts right here that are trying to come back up, probably to get out of some positions and then drive the price back down. Ultimately, that creek is where the hook is, and you can see it very clearly right here on December 12th, 2018. Okay? And after that point in time, you're kind of left wondering, well, where are we going to go? Where was the earliest indication that this might be a problem? And it's back here, right in the get-go, okay? This is kind of an important concept if you've never really understood why I call some things creeks and some things are not. When you create a resistance, right, and then you back up, these are 2 points of very high points of interest, right? There's 2 main points here that I'd be looking at in the future. One is where the breakout occurred. That's really important. The second is the bottom that happened right before the breakout. Okay, so that's a support and then that's a resistance break. But the thing that maybe is what's different from what other people do is that a lot of people will draw those lines and they'll say, well, that's the floor. Okay, were they completely wrong? No, it does bounce through that. But here's something that's really subtle, right? Which is that this creek, and this is the creek that I'm talking about, this is the final resistance that was jumped. It is never checked. So it takes off from here and it leaves, never checks this at all, right? So it goes way up top, makes the top to the range, and then this auto reaction to a buying climax here goes all the way back through, and it doesn't just go to the creek. At this point, because of how far it's gone over time, in order to get to that creek and retest it, it now has to break below that floor that was created, right? And then in addition to that, it also breaks below the previous floor. There's a lot of issues there. That tells you that something in the water is off. You don't have to make every conclusion from that, but you can definitely look at that and say something's off. Because when you have a bullish range and there's an auto reaction, let me do it this way. You should not be coming back beneath the preliminary supplies and supports. That would be these levels. You could come into that area, but you should definitely not be coming back through that top support. That's almost always, without doubt, a sign of weakness like that. Almost always. So if you take off and you do not check a creek and you're starting to notice that, oh, well, time's going on, man, we still haven't gone back down. Before you know it, you're way over here and there's a big reaction. The only bullish option at that point is to just not go there. Is for bulls to say, no, we're not going to go there, and just continue out. Not go up and redistribute again, nothing like that, but just remain strong. If the bears have any kind of strength and there's weakness, hence the term SOW, then it will go through, and then that's a bigger SOW. So when you look at that breakdown and then you come back to the top, this becomes very problematic. As soon as this creek drops, there's no other really anywhere to go. You're now looking at long-term massive creek drops from like way back here. So this is the last one. There's 2 jumps here. So this is the first jump. This is resistance. This is the second jump, right? And that's it. And you can see that intersection is hit. The idea of triangulating in the market, the way I do it, I get mocked a lot because people will look at that and they'll say, well, that's never going to happen because you're here and that's way down there. I just did a long bit on GME and I did triangulations like this and they're really low. And people will say, well, that's never going to happen. I don't know if it will or it won't, but the point is that that door is open. And if it's an open door, it should be on your radar and something to consider. This is the same thing that's happening right now on the S&P 500, and it all goes back to this weird date, and you can see it really clearly on August 7th and 8th. You remember that big sell down that, again, was kind of based on like fake news? Like it was a fear-based driven sell-off that ultimately was reversed like right away. Big V bottom. There was a lot of news that was like, oh no, and then it was like, oh no, it's not a big deal, right? That was an SOW. It did the exact same thing here in that it bled below the bottom. It did not check that creek early on. So you can see the creek that was built out. In fact, this goes pretty darn far. It almost goes beyond it. It doesn't quite ever get there, or at least on the S&P, because that's where it broke out right there. It might be a little bit off the way I'm drawing it. The point is it overextends. It's the same exact setup. It overextends, and there's a weakness right here in the chart. But because of the way that the market was moving going into the elections, because of all the news cycles, it was really buried. I hate to say the word bury the lead. That's not quite the right terminology here, but they really buried that lead, because this is like the indication that, yeah, we may be going down in the future. This did happen on IWM, and I said on IWM, I'm not really sure what that is. It doesn't look good because it has this problem. When we came down, it broke through like every single creek and level that we had. You look back on it and you're like, sure, I guess it was already baked in. You can see that weakness right there. I anchored these points, and that's where the market bottomed. So does that mean that it's over then, Booksy? I'm not so sure. Again, because of the way this is set up, you'd have to kind of go backwards and look at every one of these and see if there was an SOW. I don't see much else beyond about 500, which is about 494 on SPY. But if you look on the bigger picture, again, problematically, look at this as a macro version of itself, of this like smaller guy. You're like, oh, well, we could have a V-shaped recovery and go back up. Yeah. But imagine for a moment, and you guys are like, this is going kind of out there, Booksy. I know. But imagine for a moment you're observing this on a wave and you're looking at this big picture. Here's what I think is happening, and I've seen it on SPY, I've seen it on GameStop, I've seen it on AMC, I've seen it on Tesla, I've seen it on a lot of these stocks. There's a decent probability here. It may even go up to all-time highs again. Potentially. There's a decent probability here that this is not this kind of a sell-off, right? And you guys are, well, then that makes huge implications for the future. I know. There's a huge amount of pressure building right now based on the fact that this is so oversold. to have some kind of a relief rally. We really haven't had a good one. The March rally was kind of weak. It was really more like you call it like an LSPY, like a bear flag. Nothing that looks particularly good. My concern is that this is going to break out potentially even to all-time highs and then almost immediately kind of come back. And I'd sort of talked about something similar to this with AMC going into May, because we did a new model for it that funnily enough, I guess, it actually ends on the same date in 2026, but it spent more time down bottom. And what it was is quite simply on AMC is it's like a false rally, potentially. This is not it, but there's like a false rally into May, June that makes you think that the market is going to go. It would be like this. It makes you think that the market's going to go, but then it actually goes back down and it hits a new low. And previously, AMC has kind of like avoided some of this in the past. All right, so here's what I'm saying, okay, the short of it. And I know I just spoke a lot, but I'm kind of trying to summarize this very quickly because I was looking at the charts today and yesterday trying to make ends meet of like, what is going on? This place is bananas. Like, market's not acting like it understands what it's even doing itself. There's a huge disconnect, by the way, between tariff news and what people think is going to happen, because like imports only make up like 15% of our GDP or something ridiculous, or it's exports. I can't remember. It's not even like a huge percentage. It really makes zero sense that people would be dropping 40% plus of stocks just on that news alone. There's something else coming, right? Which makes me think that there's a possibility this is like a macro SOW. Now I'm not really going to get into like huge conspiracy theories or anything like that, but I do think there's something else that's not quite right here, right? And when we look at that June, July date going into maybe into 2026, I see a lot of similarities in the market behavior right now as we saw back in COVID. There's a fragility to it, and I think that we may actually end up having a pretty green year, like overall, but that I think it's going to be very similar in some ways. And you guys are like, well, why don't you think this is already happening, right? It's this volume. I just don't see it as, it's not enough. There's something kind of off about it. Everything just feels wrong. I know it sounds like a stupid reason to think anything, but it really does. It just doesn't feel like enough. And when you look back at what happened in COVID, the recovery that happened, I wonder, part of me wonders if we're doing something very similar, but it's not going to be quite as high. And, you know, we can go on and on and on about theories, but at the end of the day, this is kind of a massive, you can call it an S curve. It doesn't really have much of an S to it. It's really just a big bounce, right? But it does back up to the top and then come up again. I mean, you can see it. I'm kind of fudging like the timing on it, but it's right there. There's not much to that, right? And then when we come back down, we like land back at the same spot, and then we take off. We're like, okay, we're not going back below there. We're going to take off again. Had this not gone that high, let's say you had imagined that this went up and it had like a weaker response. Let's say it had a weaker response to COVID, and it pushes up high, but when it comes back down, it tries to hold that level, but it doesn't ultimately hold it. It could have ended up very, very differently. This could have been like a massive head and shoulder very quickly, especially if you had dropped beneath here. I specifically made it look like a cat ear because it's typically what we would see, right? And then you'd have like a bigger sell-off. Now, I'm not like 1,000% on any of this. I never would say that I am. But part of me wonders if we're going to do something like that right now and go back up and actually do the cat ear kind of drop down and this time bleed through it, because we also did not check this kind of super macro, and it is big. It goes from 2022 to 2023, and there's a gap down there, which is strange. A lot of gaps right here on that breakout in this little range right here from 410 up to 450. And I have to kind of suspect that that level, just like what we were talking about here back in this region when it broke out, that level becomes like a point of interest because that breakout happened, right? And then there's no retest of that creek. And so when the market falls, it has to go back to somewhere, right, to find support. And this is kind of the preliminary support, preliminary supply. It's really both in some ways. But it's the earliest kind of resistance / support that's made before this breaks into the range that it's going to trade in. So when we look at this like big picture, part of me is like, okay, I mean, I get like where people are coming from saying it's going to just keep dropping right now and all that jazz. I look at this and I'm like, this looks like a big trend that we just popped through. And that to me is what I would call an SOW. But here's the big thing, right? The big thing is this, and I will make this so simple, right? Because we have seen this hundreds of times in the last couple of years when we've been watching these breakdowns. Is that when you look at this helicopter point of view, all right, what pieces are missing? Nothing's missing, Booksy. It's going to break back out, find support, and go. That's possible, but only if it comes back up and then it holds here. Because what we usually see, if it's bearish, is one of two things. Okay, and this is really it. This is really all it comes down to. I accidentally locked it. You really only see one of two things. And then this is the other creek. It's way back here. Maybe a little bit higher. If you want to use that one or this one, either one would be fine. These would be the two that you would use. They're pretty far apart. I might use the bottom there instead as a projection. I'll make that smaller. Doesn't need to be that big. The other option here is that when you have something like this, if this is already done, and I couldn't tell you, it looks to me like it might be because I can't tell you for sure because it looks like a 1, 2, 3, 4, and it's missing a 4. It's missing that fourth up thrust here. So this to me looks like it's not quite done yet, but if I were counting it as a cat ear, it looks like an elevated one. And then this looks like a compression of the last ones. It's a little bit messy, but I would look at it as that right there. I know it sounds weird. It looks weird. But I have to kind of like eyeball. This is the low point in the middle when it popped low. And then this is a build out ultimately into the top. So weird as it sounds, it's all kind of like one move right there. Could it be done? Could it be like that was it right here? Like that's the last, that's the hook. It's going to drop. There's no more. Maybe, I don't want to say no, but at the same time, I'm not seeing it right here on RSI at all. I don't see any kind of big reaction back up. Everything looks kind of mild and just downward, like it's all part of the same trend. So at this point, you really only have one of two options when you see something like this, and we've known both of them. One is a retrace and jump back above what we call like the ice level. And in order for this to work out, usually what you see is it has to like hold. And then in addition to that, when it backs up, it can't break down again. And it has to kind of hold that and then advance further and start jumping creeks. That's a lot of if-then statements, right? So like you can't even begin to like completely know the truth of it until you get from like A to B to C to D, etc. Okay, so it has to come back above the ice. It has to show it's not going to go back down. This would be easier in practice than it is in theory, because in practice you would see these things as again like little creek jumps here and there, like this kind of a creek right here. That one was established. That's already there. We don't have to like make that up. So you would see an advancement there. You'd probably have some kind of a series of advancements that are somewhat parallel. We don't need these to be extended lines, so I'm going to not be the extended lines. So this is option one, is that the remainder crosses up and over and ultimately does break out because it holds the trend again. if this happens, then the next price target is actually pretty simple. It's really the likely top of this rising trend. It's usually pretty straightforward. If you can get through that, then you're usually in a pretty good spot to get through the rest. Okay. And there's probably a middle here as well that would intersect, and there is right there. And I actually think this might be a little bit high. I'm kind of I'm going to like let it go beyond it because I don't really care that. I'm going to make it more loose. I don't really make it super tight. So I'm going to let it kind of chop through the price a little bit. So you can see how that would work if it's going to rally. And you could be talking about going up to 600 to 680 even. You're really talking about a range here, and I don't know exactly when you get there perfectly, right? But we definitely could be in a position where, sure, if there was like a summer rally, you could be heading up there, and then even going into the new year, into 2026, which we've talked about quite a bit. You could be getting there. Now, I'm going to point your attention back to what happened in 2020, okay? Again, because you're like, well, that's really far, Booksy. Man, we could be going way, way up. Yes, but here's where things get kind of interesting, okay? Back here, if you look backwards, there's a lot of question marks perhaps, but I would use this one as like the most likely guide. Probably that. I wouldn't have done it that way. I would have used the bottom and the top. This is an M cross, right? So this breaks down and it has a really high push, and its potential is to go up pretty high. When you look at the COVID angle, like the bottoms that were made, this particular trend, which is 2053 on my chart, and it probably would change. So don't be like, I got to find the 2053 angle. That only works if you're using. That angle is actually really close to what was existing as a trend previously anyways. Like it's a I would say it's a relatively simple parallel that seems to be playing into much of what S&P 500 has done previously during bull trends. It matches almost perfectly the trend from 2016 to 2018, so on and so forth. Okay, you can kind of take it backwards from there and just sort of check it out. What just tells me it's kind of the regular motion, of what may or may not happen. Well, going back to kind of what we just talked about, sure, there's a possibility that this goes way, way high, but notice this is the bottom, this is the top, and they're not different. So I'm going to try to show you what I'm trying to say here. If you look at this trend that was being made, it never actually got back above that wave. So much like what we had back here with that steady flow, do you see the similarity perhaps to some degree in what's going on presently? You guys are like, well, maybe a little bit, Booksy, but that just looks like it takes off and goes to the moon afterwards. You're just saying we take off and start following this lineup? Again, in the bullish case, yes, I do. Because in the bullish case scenario, there's no reason why, if you could re-advance here and it's strong enough, there's no reason why you couldn't just gravitate here and then just kind of continue upward over time, right? If it were just long-term going to be straight up bullish and have no changes. But I want to point your attention to, again, the idea that this may indeed be like a shrinking iteration to the upside, which we've already kind of seen hints of based on volume coming down over the last few years. That there's a possibility that you're going to get what I would call like a sucker's rally or fool's rally that's going to make you think that this is going to just keep going. You've got the big buy-in, and we haven't really got it yet. Now, we might get one locally, right, that pops up to near 530. That makes sense to me. You would at the very least have to come back up and check this level. That's a simple enough one, right? We kind of did that, didn't we? Yeah, they already sort of did it. Wait, when? When they screwed everybody over with that quote-unquote fake news, they popped right back up to that line, right? And then dropped it back down. That was the bullish, like, hey, we can get out of here kind of moment. And the bears were like, no, we can't. But thanks for going back and checking. I think they'd probably want to do it again. And guess what? Did it again today. Came back up to that top and checked it. So already we've kind of come back and checked this a little bit. But it's going like parabolic, okay? So I'm going to get to this. I know it's like taking a minute, but we're doing like a big picture analysis here, and there's a lot that would probably need to be covered to kind of get through all of it. All right, there's a lot more that we could talk about with like head and shoulders and motions down and so on and so forth. But I digress. We want to make sure we're kind of staying on focus. I'm going to do my best to focus here. So the idea here of like a late or an April-May rally, which we've been talking about quite a bit, does seem very possible and probable. It does not necessarily suggest that we're going to get a rally tomorrow, Wednesday, just because of tariff news or whatever. In fact, it may even get worse, right? Again, before it gets better. But if you look at the grand picture here, the biggest problem that we have is we never came back here. And now we're like really overextended and you're like, we won't come back there. I don't know. That's a big question. And frankly, if we went down earlier rather than later, my expectation would indeed be 450. I think if you've seen that technical level show up somewhere else, whether it's through analysts or whatever, I agree. That's where we broke out. It would make the most sense. The rest of this creek, I don't know. It's kind of debatable to me. I feel like that's pretty low. You might hit it on an extension, like go down to like 430. But what happens if you get this fake out rally, right? Well, again, this is where things get kind of dicey, right? Because on the one hand, it's going to look really bullish to people and they're going to think, well, it's probably going to go up. But I want to go back to the bare bones here. And what I'm going to do is just kind of mute this. So certainly you could say, man, I think it's possible it goes up and just starts going. I'm a perma bull. I think it's going to keep going. Yeah, it's possible. All right. It's possible this even hits some ridiculously high number. All right. But I'm going to make two counter arguments to that. So number one, the first counter argument is that, again, the build out to this is eerily similar to the build out that we saw here, albeit it's much, much smaller. So what does that mean, Booksy? Remember what happened in 2021 with, and this is where I'm like, oh, maybe I might be having an aha moment. Okay. Remember what happened in 2021 with AMC and GME and everything else? They went on a tear, right? But weirdly enough, and we already know this story, I've talked about it a lot, GME starts taking off without AMC. And roughly it's around that September date here. Now this is a really similar time that the market's already in takeoff mode. So what GME does, it just goes, we're going to just use the all-time high because that's what ultimately, like the only comparison we can really make. So GME goes into this like crazy like takeoff mode, and actually I went way too fast. And it goes into an elevated period going into January 2021, and it has this massive takeoff, right? Again, I'm going to use all-time highs to do a comparison, so it's not going to look like exactly what it looked like, you know what I mean? Basically, you have a massive cat ear, and then in June, there's another big spike. Again, timing here, a little bit off, but that's okay. And that's what GME's chart looks like, okay? I'm going to leave it for like there for now. All right, so this is GME. The timing of this doesn't really make a huge difference until you see like the big picture, what happened with the S&P 500 and what I'm trying to say right now. Weirdly, back in that time period, if you recall, AMC had actually already made a top and it was coming up for a secondary top. So it had I'm going to do it like really tight, really fast, and then I'm going to do it like this. So it made a top, but it has this kind of like longer sell-off. It kind of advances the market. It honestly, it kind of predicts what happens at the top, interestingly, because it's already in like a downward trend. It has this big spike. And a lot of people, again, they don't remember this, so I keep hearing it like, what do you think GME is doing this next time? I'm like, dude, it's not going to be necessarily 1-to-1. I don't know why anyone would think it would be. But a lot of people seem to think it's going to be 1-to-1, and I'm like, I don't get that. There wasn't 1-to-1 back then. It doesn't necessarily have to be 1-to-1 now. In fact, AMC actually went to a spring. If you were looking at this from that point of view, again, just doing a comparison, it would be something like this. Like the hyperbolic nature of it obviously is there because I'm doing a comparison to S&P 500. It went back to its previous lows, right? All the way back down. And And you guys are like, well, that doesn't look proportional. No, it doesn't. Again, remember, I'm just comparing it to lows and highs at the time. So we're doing a chart based only on highs and lows from COVID to the tops, okay? I know it's not proportional. Maybe more realistically, this would have been like way down here, okay? I don't know, because GME was really low during that time, okay? But it did break out of its creek. That's what I'm trying to say. It broke out of its creek early. So this is almost impossible for me to draw. That's why I kind of had it up top, because it was already like in a little SOS down low. So it's a little confusing. So this is like a breakout inflection point for all three of them, really. And then this is where we get this massive hike in on balance volume going into like December. And then AMC drops to the pit of the earth, and then it breaks out. And in January, it does not go all the way up to the top. It only goes like halfway. And I'm having trouble drawing this now because of the way I did this. But you get the point. It only goes like halfway. So halfway up here, that's half the range. I'm not going to do the rest of it. But here it goes all the way up in June, right, to hit its all-time high. Now, what happens with GME and AMC while this is going on in the market on the whole? And you'll see why I'm doing this, because there's a similarity to what we're seeing right now. AMC is missing its big OBV hike. It doesn't have it. I think that what we might see is this kind of momentum that happens building out into 2026 February. In fact, it's actually very, very like truncated, right? Now, I'm not suggesting that this necessarily goes all the way up to like 780 or something like that. I think that'd be pretty crazy. But it may very well have a similar kind of motion, okay? Probably we're going to use this line instead. Let me make sure I get it right. It should be here. Yeah, because, and this is the bigger picture, like, oh, moment, because this is actually, if you do the comparison, the breakdown had supports along the top right here. This ultimately has a break above, and then it comes down beneath supports. But notice that like it had taken off. Again, we're doing kind of the same thing in two different ways, but it had taken off and used, and there may even be another one. I hate to go and find like 7 or 8 of them, but there's a lot, okay? So we really would be looking at pretty much every single, what I call a cross trend, which is a top and then bottom. So like one example would be like this SOS right here. So this is why I'm saying like it doesn't necessarily go up to like 900, okay? This is an SOS right here that pushed over the top of this range, which was down bottom, right? And then there's a backup to go retest it, and then it goes, okay? That's an example of a top. When you draw that back through, like here, for example, oh, that doesn't look like super hot, does it? Well, I mean, it matches everything else. It certainly would match in a bullish case if this came up and did this, because you'd be like, sure, it's jumping over that as well. That's technically like a cross, because it does have 2 points right here early on, 1, 2, it actually goes even lower than that. And then there's a third and a fourth on the opposite side. So you have 1, 2, and then right on the other side, actually there's 3, I'm sorry. 1, 2, 3. Notice that we didn't check it on the way down. Okay. Oh, this may not be that strong after all. No, it may not be. That is a widening. And you guys are like, well, that's the widening, right, Booksy? Yeah, that is the widening, because obviously it broke out and it came back to where the widening started. That target's done. But that doesn't mean anything now for the future, because if that widening breaks down, the only thing that gives you from a Bukowski standpoint is that you would more than likely come back to where the widening began, which again was right here, which is exactly what happened. One more win for the Bukowski crowd, because people often come in and say they don't like that stuff or they don't think it's a good way to trade. He's not wrong about those kinds of targets. This is where it went to. And we already know that's also like another, creek support. We talked about that a minute ago. It's a pretty strong triangulation, okay? So when we're talking about GME and AMC and we're talking about this build out, again, you might say like, well, that doesn't really bode very well then, does it? No, not necessarily. But let's talk about what that might look like from a bearish standpoint. So if I just use like a 1-to-1, all right, what this might suggest is that we hit some kind of a low. Maybe it's 450, maybe it's not lower than even like 465 or something like that. It doesn't ever quite get there. It doesn't really matter. Maybe this is the low. Really doesn't make a huge difference because that would probably happen within the next few weeks anyways. If you take the same model right here and you build it out along the current kind of trajectory, right? What it would tell us is that aside from coming back up and retesting this blue line, which is very, very important, that the rest of this could eventually build out, you know, from from a bullish standpoint along these markers. So if we were to just kind of like summarize it, we would say, okay, somewhere right here, there's a build out, and then potentially there's another drop. Because if it's a 1-to-1, but it's kind of shrinking, you're going to get the same kind of build out, but it'll be smaller. And then when you look at what happened again, timing wise, this is a lot shorter than what happened back here. Yeah. But it's ultimately like essentially the same timing wise. Now, what happens during this period, Booksy? Is it just going to rise and like look really bullish on, SPY? Maybe. Because, and I don't want to be like, everything's not a maybe, right? But I just want to demonstrate like why I think this is probable. When the market tanks like it does, and it often does, when there's a big pullback, and I'm not talking about macro scale, I'm just talking about like on the small scale. The two targets that I most frequently would look at for a backup, there's only really two that I look at. One is the 50% marker of the previous range, because that's not too far to commit to anything. That's enough to give people some incentive to buy in. The other is the bottom. It's pretty straightforward. We have both of those right here. We don't really need the top in this case, but you could have it if you want it. Presently speaking, is there a precedence then to have this come back up and test this without actually breaking out? I think so. Now, I've drawn this kind of haphazardly, but another thing that I would look at is a series of parallels, because when the bears start to turn a stock down, and this is pretty universal, right? We've seen it just like back here. These tend to be a big part of the overall kind of motion here, where you have like a consistency of direction, like we're going to try to take it down this direction. And it doesn't always work perfectly where you're going to get some like nice, pretty head and shoulder build out or some garbage like that. But there usually is a wind up and an unwinding, and then that tends to be a fairly big factor in what we see. I might want to make this even more exact because now I'm trying to do this. I don't want to like make it super crappy. So I'm going to do what I can. I think I'm pretty close. I think I'm slightly off by like a degree or something. So I want to make it as close as possible. So again, we're looking at resistance, supports, resistance, supports. It looks like there's two here that are possible. Those are the two pretty different angles. We may need to make one like a different color, but I want it to be kind of similar. That one actually looks pretty darn good. I like this one a lot. I might like pick it better than the other one. This is like a lesser one. It does apply here and here, but there's always like a push through it. Not a big a fan of that one. So it's not the strongest of them. This one's much, much, much stronger, but we'll keep both. Yep, and that's the top right there too. That matches that. And the breakdown here. So these are both pretty darn strong. But I think that purple one takes the win and over the pink one. Yeah, this kind of matches that one. The point of this is just to give us an idea of potential resistances if you hit a top, right? And like what would happen after that. We're not going to get the perfect answer, but I think I'm going to go with the purple because I think that's better. Yeah, it's pretty weak. This is really important, though, that we get this, and I'll tell you why in a minute. We're getting to it. So when we're defining this area, what I would suggest is if this is indeed distributive, and long term it's going to go down lower than low, maybe even back to like a double bottom in 2026 or something like that, way back at like 400. It could be substantial, right? This doesn't have to be overnight. This could be like the whole year. We really can't, I can't look that far ahead right this second, but I will say that the ups and downs tend to be pretty consistent. So we've already done like upside. That's pretty straightforward. You would break out here at 600, yada, yada, yada. All right. Downside's a little trickier. When we have downside, and you already know this, I look for the cat ears. Well, you said they were right here, right? Yeah. In theory, they're kind of right there. But you're going to get another set over here because anytime you break down through a trend, the cat ears are always there as a way of walking through it. And when we look back at the history of the charts in the market and we check out what's going on in these sections, the idea of the cat ear is very, very, very simple. It's simply like an M cross down, like if it's a bearish cat ear, as opposed to one up, which we usually just call an S curve or something, right? It's just an M cross down. And to us, it's easy to tell that it's distribution if we think about it in terms of something as simple as like a cat ear. Right? And there could be other junk happening in the middle, but that's basically the motif. So what are we missing here in that motif? We're missing a lot, right? We don't have any of this other stuff. It's not there. Yeah. Sorry. I'm working through it because I think that this time in the market just sucks. I'm not happy with the trading. I can't make any money. I feel like there's going to be a huge opportunity in the future, but we're in this place of like uncertainty. And I think that there's going to be a big motion that happens that's not what people necessarily think it is. And I know that that's kind of saying a lot without saying much at all. I know. But I do think it's really important to just kind of take note that the market may indeed actually have a semi-positive year that does not actually, I mean, it could go pretty far. Like we said, this is one of many, so I don't want to think that there's not another possibility here. We looked at one, there's another one way up here. This suggests, again, top, right, versus this, which is kind of low. But when we look at it, the point is, like, these are just potential targets. What is the general motif here? Like, if it is indeed doing a copycat of what we see previously, then we should be able to identify a very similar motion. That is a lot of volume, yeah, sure. But it's not as much as we've seen in major sell-offs in the past. Not even ones that are not quite as extreme, which is kind of interesting. So when we see this as a potential cat ear, I think it changes the nature of the conversation. All right, so a cat ear in this instance, it could look a lot of different ways, right? So I've kind of drawn it one way, and that's it, which is just kind of up and over. That's because we were just kind of looking at a comparison. This is really a flat, kind of ascending one. But certainly you could have one that's rife with all kinds of weaknesses, right? This is very, very possible that the first one is going to indeed come back and check a lot of these levels. It may even have a sign of strength there in the push out. Then what? Very good question. If you get a rally into July, does that mean you're just going to keep rallying? Well, if the market's got some strength behind it, it might. But the general motion of the cat ear is always the same, which is like a down, up, down kind of motion. Okay, very simple. All right. The way in which we would understand this is in the structure that it's already been given, which is why I drew out these lines earlier. Thought you were going to relate this to GME and AMC, Booksy. I am. Because we've already done an extensive analysis on GME and AMC, like a really long analysis on it, multiple times this year. And I think that when you look at the broader market, it's kind of giving us a picture that I think is quite interesting, right? If indeed this were to happen, this looks, again, it really doesn't really matter how low this goes right this second. It really looks like a rally that ultimately, you guys are like, well, that's a rally to the end of the year. That's really bullish. Yeah, but that's, again, one possibility of many here. We're going to get to the others. This is just a basic drawing. I'm trying to give you like the simplest, right? The suggestion here would be that this is essentially like a UT, and that later you'd have some kind of a UTAD. We're going to come up again, and you might say like that's really high for a UTAD if that's the trend that you're kind of following. We only have these lines to go off of. So right now, that's got to be it. That's all we've got. We also don't know how long it's going to spend up top. So there's another question in the works. All right. We don't know what we don't know. We're going to use a few different methods to kind of better estimate, I think, what we might expect. So if this goes down and makes a lower low, this is going to obviously be different. If that's where it's going to stop and we're going to have a later year rally, then this is probably fine. We're just going to use it. So right now, the retracement, the golden pocket retracement is around 560. That makes some sense. I mean, you could see that almost immediately, frankly, because that could be a retest of the yellow marker or the blue, which is a 50% retracement. That almost makes even more sense to 540. It certainly seems like a hot zone area, is what I'm trying to say. So certainly that's a possibility. But then you'd have this problem of like, well, could we still make an SOW after that? Yeah, and that's what I'm trying to say. The idea of a market bottom here, it could be very complex. The idea of a caddy here could be very complex because if this goes up fast enough, let's say it goes up right into June 10th, then it really could avoid altogether entering this channel. And then you could have a late sell-off into like October, with the market's typically down bottom anyways, right? And this could even be another SOW, perhaps even born from like another, and I don't see anything over here that would necessarily indicate that. Maybe this. All right, so this is, again, the general motion here isn't to be confused with, it has to be 1-to-1, okay? But if this were to happen, I would look back at this and just say year 1, year 2. Like, this is why it seems really simple to me, because I'm like, well, it's just a wave that's breaking down. And that's as simple as it is, 1, 2, 3, and then back down. What happens in the middle, again, this area, like a number of things can happen. Yeah, it looks kind of similar to that. Maybe there's a similarity there. It could be an expansion of this is going to happen over here. I don't know. Expansion, iteration, and shrinking iteration are both things. You see them both in the market. If we're fabricating a sell-off that's similar to this, then this is exactly what would happen near this top. You'd come down and you'd have a sign of weakness, and then that would be ultimately like where you're going to go down next. The problem, I guess, with this one is we don't really have, at least right now, and I'd have to kind of doodle it, is we don't really have like a great creek. We've got one local one right here. This is just, I don't even know. Like, the best way to describe it would be to say that this would be like the first of many, because usually the steepest creek is not the last one. It's not the one that matters the most. So I don't think this one matters that much. I know that you might think it matters. I think this is kind of like that suckers rally thing, right? Like, this could easily punch back all the way back up to 560 to go fill a gap and then drop again, right? Starting in maybe May, it breaks out, runs up. We get some chop here, and then we go. And again, it could come back up temporarily. It could walk up a little slower. Who cares? All right. The big picture here is that it's up until that time. You get a rally into May and June and July, and then you drop again But because you didn't check the creek, which seems very likely to me, then it dumps really hard. This is like an SOW. This is where everybody says the market bottom is in. And it potentially could be, again, if it rallies and goes back above those markers. We already did the bull chart, so if you're just joining or you're looking at this thinking, well, there's no upside options here, that's not true. We already talked about that. We know where those levels are. They're the same levels that these would ultimately get to. But this is like a secondary rally that goes up to 2026 top. Again, the way I would look at this is quite simple, right? Is that this is essentially like a gigantic wave interaction that's interacting with multiple trends at the same time. And ultimately, could it come back up to all-time highs? Sure, could happen right here. Doesn't really matter. All right. The point being is that when you get to, again, long-term, right, we would see this as potentially an SOW. I don't think it would be that low. I made it way too low. It really looks like it's going to be early June. I put it in July, but it would have to be earlier. Because if this came down again, you're going to form an SOW that's going to point to wherever you're going to go in the future, something like that. Yeah, but how could the market possibly do that without knowing the news? Good question. I don't know. But it was doing it back here before it got to COVID, and it was a really similar setup. Now, the reason I talked about AMC and GME, we're going to sort of come full circle now, is we started with this area after we did the bearish example. The reason I talked about AMC and GME was because in 2021, remember AMC goes into like this capitulation mode while the market is attempting to like break back out. All right. Now, this is obviously pretty different because if you're talking about a repeat of what happened here, you might be suggesting that, hey, man, that doesn't make a lot of sense because now we're going to be talking about some massive swing up and yada, yada, yada. We can get into nitty gritty. I think it should be very surgical if we're going to dissect it, and I'm okay with that. I am. I hope you guys want to be surgical about it when you do your own DD. But what I would suggest is, sure, if it's possible, we rally to all-time highs, then sure, it's possible this is up here. Like we were saying, like the higher targets before it comes down lower. Certainly a possibility. That would just be humongous widening. I don't even know how you'd even chart that beyond just whatever. I don't think that's likely if this does the first part, because the first part would be an SOW here, and that suggests that you're probably not going to come all the way back up and way beyond. You might come back to the top to 600s, but you're not likely going to break to ridiculous highs. Like at the highest, maybe 650, right? This area. So I think that's reasonable. But I don't think it's reasonable that you would go way, way, way beyond it. Again, you're like, well, it's a market rally. They'll just go. I don't want to say trust me, but what I'm going to say is if there's an SOW here, then I don't necessarily expect to go way beyond it. Like that would be unreasonable to maybe make that expectation. This is the only other marker that we have locally. And this is the one that I think, again, is probably your best friend. In fact, I'm going to make it red. So you're like, I don't like red. This is the one that, again, we didn't check. So when this broke out in March, I thought we were going to come back up and check it. I kept saying 583. That's the reason I said 583. I don't believe that this stuff remains untested. Long term, this marker will be tested. I can only say that with 100% certainty because I think long term it will be, but I can't say with 100% certainty where. When you look at the triangulation of where that meets this, it is in December of 2025. It's a very good triangulation. Where does that meet all-time highs? Right there. Does that follow through with the line of thinking that we have right now? Yes. But what that also means is that that is now an extreme resistance because this was support, right? It has to break back over that in order to get back above. I think that's the kind of triangulation I look for when I look at two waves because I usually look at the last known bull trajectory here and then I look at the last known bear trajectories here. What if it's just a market bottom here to 450 and never comes back low again? I don't know. That answer is completely different, but yeah, it's possible, I suppose. That's not impossible. Then we're going to talk about a whole nother series of things. I'm not going to get into that right now. But if you thought like, well, maybe that happens, but then it's going to land and it's never going to go back down again. It's only going to go down to like 500 and then build out here. And yeah, I mean, that's not impossible either, but I'm not going to get into all that right now. Like, I think there's too much. That's too much, and that's too far in the future. But I think this particular setup is not that far in the future. We're really talking about the next 6 to 9 months. And to me, it looks like a pretty straightforward setup. It really does. I think the way this is going to move seems very similar to the way that we moved into 2022, which really was just a preceding, it just came before like the real backup, like the real sell down that we needed to have in order to find support. Yeah, we broke all-time highs, but this is a really critical backup, of this reaction. But if this is weaker, and it looks like it might be, I think we could get something like this, pretty straightforward. The other option here is actually also pretty straightforward. Weirdly enough, the way that this built out after that COVID drop was it has this kind of like rounded look to it. And I would suggest to you that that's not even that unreasonable either. I still think in the end, you're looking at waveforms in terms of like the cat ears as potential breakdowns. So like no matter what happens, and I could again try to like walk it through 100 different scenarios or something like that if we really want to, no matter what happens, like I would still expect at some point this is going to happen, right? That there's going to be some kind of a walk down back through there if it's bearish. If it's not bearish, it won't walk back through it. It shouldn't anyways. That's not typical to break back through a creek like this. But this is essentially the motif. Up, down, easy, right? It's just how does that happen and in what timing? The motif here on the whole, this is usually how it works on the big picture, is that you get a first wave, a second wave, and a third wave that are roughly, I would say they're just equal parts, because again, we're talking about schematics here. So if we're going to use that timing, it's kind of tricky because I really should be using the breakdown moments, but what I might do instead, I think this point is very important as well. We may have to work with that some more. I think this one's really critical. Maybe this is even lower. Yeah, it could be like way out there. That'd be horrible. There may be two. One would be like an indication of future like top. One be like more short term. The reason that's important is because it's peak RSI and the rest of this is divergent. So it doesn't actually go there. It's March 2026. It looks like February. We had talked about this before as well. We'll do it better in a few minutes, but it should be that window anyways. That's March, February 2026. Anyways, so what happens with GME and AMC is also, I think, quite telling, because when we looked at GME, there was something odd that seemed to be possible, which was a pump into 2000, excuse me, not 2000. For GME, it was like a pump into like 50 and then dropping really low back to 17, which seemed really weird because it was like, why would it do that? That's really strange. Why would you advance early and not just go? I brought this up earlier because this kind of makes me wonder. There was never any other highs that were made, and GME and AMC, about 3 or 4 months apart, hit their all-time highs very early. I mean, if you look at the big picture, this is significantly earlier, almost a year, which is kind of crazy to think about. But this is 2021, February, and then this is January 2022. And really all that happens during that time period, and we can look at GME really quick to see it. Really all that happens during that time period is GME is like chopping, and essentially it's getting ready to distribute. It's a really long distribution cycle. Now there's other pops that happen, but at the end of the day, like, that's what ultimately this looks like. And you can see right here, basically a year later, I mean, this is January 2021. This is December, and then this is January 2022. So the walk down builds out until that time. Then it breaks down. It leaves this area behind. This is a pretty important level right here for that reason. It's like $40 now. Yeah, and for all intents and purposes, I think that's pretty much the range you've been looking at as the distribution top anyways. But that area is where it finally breaks down a year later. AMC does the same thing. Builds out like this massive cat ear thing. It looks a lot more like the second half, not the first half, because again, it had that secondary run. The point being is that SPY is going up during this time period, and AMC and GME are already kind of nestled in the top. And I had mentioned this previously, as I have been timing it out, and it did look to me like the market might actually kind of go more one-to-one. But if this is truly building out along like a creek bottom here, and it's having like a come to terms moment, right, then it's pretty similar to what we're expecting to see on AMC and even maybe on GME, although that could be a little bit different. Going into June, July. And so the two different models, they're pretty different, okay? So one is that you pump and you just drop down to new lows going into May. I think if that happens, this pump, if there's a decent enough on balance volume brought in, I think it's okay. But if the pump is longer going into May, I think it's kind of like this expectation that it's going to do the same thing. I don't necessarily think that's correct. What if it does? What if it's as crazy as all get out and it goes way up and then drops way back down? Remember, this is the cross right here for AMC. And this is, again, a year long, right? This is pretty different than what we're seeing on something like SPY, where you have, I mean, frankly, like, if you look back at the same time period, it's pretty darn different. This is, again, going back towards May 2024. Just double checking, make sure my numbers aren't whack. May 2024 is right here on the S&P 500. And yeah, like there's obviously we talked about this, which is the SOW that we're kind of at right now. It's kind of backwards, right? That there's not really another one. I could guess I would have to find it. There must be something here. But I'm not seeing it. You guys are, why? Well, usually these guys build out in a pretty straightforward way, even if they're completely different charts, because the indexes tend to, I mean, the stocks that we have still tend to reflect similar inflection points of like interest. And this build out obviously defines the SOW that's to come. And then when you look at May to August on AMC, May, and then August, yeah, it's the same area we're breaking down. It's pretty interesting, actually. It's almost reversed. It's still a very important marker though. Like it's definitely respected. But it is like reversed. See, I'm not seeing any kind of clear-cut uptrend here. Maybe that. This used twice, 3 times over here. And that's a closing value right there on that candle before it takes off. So opening value, and then there's a closing value here. And then it's sort of respected. I think it's somewhere in here, but I don't know if I'm getting it quite right. I bet this is a defining of the paths that could be. Oh. Well, what do you know? You always find something when you start digging. Let's anchor these. Let's make sure it's pretty close to right. This is a weird marker here in May. I don't know, maybe I should use May 15th instead. It's a bit higher. It respects the low here instead. But if we're going to use May 15th on AMC, it's like Friday, May 17th? I don't know, just trying it out. Thursday, where's Friday? I'm going to use this one instead. Yeah, I don't know. I don't like any of those. They just don't really match very well. It might be better to look at it on a different time frame. It seems like there's a cluster right here. This is the biggest limitation I feel of this kind of stuff because you're trying to find the right marker, but May 15th, that week would have ended. Where's the close? Maybe it's the closing value on the. That does a pretty good job too. I don't know. They're all pretty decent. They're not. None of them are like way off. I just got to be careful because it'll change the angle quite a bit up here. So this now is completely different, but it's respecting still. Like there's 1, 2, 3. That's a low. That's a close. That's an open. And then right here again, it's like weakness, but it's an open. So that's pretty close. That's going way up there. So that's a lot higher. This is going to be tricky. Maybe it just means that SPY is going to have like a really, really big rally, you know? Because this one actually, on the Friday of the 17th, it actually does a better job matching here. It does a little bit of a worse job matching in some of the other areas, but it's pretty close anyways. That's way up there. That looks more like the second move than the first. Let me see where that goes. Hang on. Like, where does that come from? Oh, it goes all the way back to that. That's cool. That's pretty important. It goes all the way back to the trend from the top in 2021. You would say that that was probably the last, where this hook here, this is the last top support and then resistance. So it tried to cross up over that when it broke out, and then there's immediately like a high and then a low. Okay. So what this might indicate above all else is that this is potentially where later on, I mean, we'll see, but this is potentially where later on we have a greater interaction. Or again, the concept of expanding kind of gives it more teeth, which is a weird thing to think about. But the idea of this being an expanded version of the previous top, it's kind of interesting that those are anchoring on the same markers. So this has an up thrust, a drop, and an up thrust. And we're kind of seeing the same thing here in principle. So roughly around that 560 area, that's where the 618 retracement is. And that's the golden pocket, as we know. And then look at the triangulation here on that closing value. So this would have been where the gap is at the top. So I'm going to get rid of this. This is not helping. It's right here. It's pretty much right where it should be. It's right at right at that top. And then June 12th, the triangulation is right at that previous top, right there. I think that could make a compelling case for that reactive move back up. I do. And I'd have to go more into why, but if you didn't see what I just did. But that, where would it stop? That's probably where it would stop. The rest of this is still very speculative, but if it jumped over and it did not check that creek, I would be very, I wouldn't say overly confident. I'd be pretty confident this is the rally that everyone thinks it's going to go going into June, and then it dumps down and goes and makes a new low. And then the second rally has to cross above this area, which everything leads to the same points. Massive amount of creeks drive up to this area, like a ton. They're all in the same pocket. So it's a place of extreme reaction. So we're going to get this one right because I want to... Now I want to like anchor it. I was doing it really loose before. And then the steeper one goes here, which I think was the one we saw that hit near the top. 2000, let's see here, March 26th. March 12th was one I was getting a lot lately in 2026. So 613.21 was the top. Was there any like gaps up here? Like really obvious ones? There's one right there at 607. I think that's near the previous top. There. It's probably just 600, I mean, at the end of the day, but it looks like 608 might actually be another really important marker. So I'm going to leave that one too, because usually there's a few. That one's significant. We'll leave it at that. Okay. I don't want to do any more lines. And this represented kind of the middle of that range. And this represented the bottom resistance in that range. So I think logic follows that if this has a pump up, it probably doesn't break this just yet. I don't know about the middle yet, but it definitely looks like that would make sense, because if you look at where the daily 180 is, it's still unbelievably all the way up here at like 570. Which I say unbelievably, I mean, it just left it, but this is one of those things that typically doesn't go unnoticed the market over. You usually have kind of a rally to just go back. And then again, the bear market potential there is still there. But most people would think that if it goes back up that high, that it may not be going, or they may be going. So that's what I was saying. It's kind of like a sucker's or like a fool's rally. And then these parallels actually give us a lot of insight because, and again, it may be a little bit tricky to see it. I'll try to add something really quick here that's not too in your face. But this may actually be the biggest hurdle coming up. And it does make sense to me that if you're going to go, that could end up being a big problem. From a technical standpoint, bears have now drawn this line that was a support, right? But it's been turned into a resistance zone, like supply dumped right off that mark. And the extension, which may even be more significant above there, I think that's the target zone for an extension, which is right there. And that does match what we're seeing on both the, really on all levels here. If I'm a little off on this line, it's not, to me, it's like, whatever, I'm a little off, you know, but I think that's correct. This is the ultimate goal here, would be to come back up and retest this, and it's probably distributive. Like it doesn't hold it. It doesn't go beyond this point. And this is the moment where I think if you haven't already, it's probably the best opportunity, maybe the only opportunity for the foreseeable future to kind of get out again. Yep, none of this was really retested, so I think that's a very like easy target. And then the reaction from that would be pretty straightforward. Anyways, so the point is, it's possible that AMC and GME have kind of a two-part reaction here as well that is a little different than what we see on the S&P 500. Now, the way you've got this, Booksy, it looks like the S&P 500 may have to come down and make another SOW. I'm not so sure. We don't know yet. Like I said, this particular section is a little tricky because there's a lot of things that could happen here in a cat ear, right? Like I said, the biggest motif that I could say is like something like that. There would need to be a second wave. And I think if it goes down again, that's just an indication that we really haven't made a bottom. We're probably going to come back to like 400 in 2026, like much later. Not beginning of the year kind of thing, but as time goes on. And that to me looks correct, timing wise. Like that wave looks very correct to me. This would indicate like a middle, because there's usually like a buy-in that's like an upthrust. And then that would be like a center mark. There's a buy-in in the middle that's kind of like an early change of direction for the second wave. But it's not usually like the actual change of direction. So like this might have been it back here, for example, in this region. which again, it's like the pump before the dump, and then it tries to go back up. It tends to be pretty close to like the middle. Used to see it a lot more clearly on some stocks, but I don't see it as much anymore. On some of these, I'm just like, meh, it's not there. But yeah, it would make sense. So this is from bottom here, like entering the zone. This was May. This is before all that crazy stuff happened, right? Before the weaknesses here. So there's nothing really wrong with the early part of this rally. Not really. I mean, there's a widening. That's obviously showing some kind of a sell-off. Maybe there's some weakness there. The trend changed direction. It continues to widen from there on, really from like January 2024 on. That makes sense because it had just passed above previous all-time highs. So, you got a big sell-off. Then it continues to widen. But it's really this May 15th point that's the highest interest. And it does serve to be the same on AMC. And then you can see the wave. I think that's correct, timing-wise. Maybe we could just do it. I hate to use this stupid tool because I just wish it didn't... Yeah, I think we did a pretty good job measuring it. It's very close. You might say, well, before you go any further, Booksy, maybe you should think about the bigger picture of the world. And I know, I'm not ignorant of those things. A lot of times these rallies will ride up on the side of a wave, though. I think it happened back here as well. There was another one that was very similar here. You see how it like rode up on the side of the wave until the top, and then it jumps it and continues instead of turning down. And it could have turned down. If this is bearish, this is exactly where it turns down. We know this because the cat ears are distributive. If they're like that, you would have that turn down here. So I think it is in some ways, a smaller version of the same thing. And if you're going to have a turn down, it'd probably be right there, same point. And this falls in line with what the bullish alternative is as well, because we said that if it's bullish, maybe it breaks out of this here and it comes back. It doesn't go below this marker. These would be like the parallels from over here, which is what happened. It's probably the same thing. There's probably the same parallels here. Yep. And that's where it doesn't go back through it again. Kind of holds above. Holds firm. So these would have been like the bearish parallels that were being developed clearly there in the beginning. And they're later walked out. So this is that walkout period right here. And it actually breaks out above, tries to push towards all-time highs. Maybe it gets there, maybe not. It's very similar, but it's shorter. It's a lot faster. And what if it goes, man? It's interesting, man. I don't know. It's possible that there's a rally like late, but I'd have to kind of check and double check and see where that might go, because this doesn't, again, look quite the same. And it's starting to look really ugly again, which is usually how my charts get. Maybe like a 50-50. That's probably the easiest way to measure it up. Just a S-curve. Usually that's the easiest. But it would really be like a 50-50 to wherever this backs up to. If you don't have that information, you can't do it. Well, let's say it goes over the top. That also is too high. Yeah, it would be like 700 or something. We'd have to confirm with That's kind of way out there. We'd have to confirm with other trends to see if that matters or not. 2026. That's a very bullish option. But I think that kind of move right here would be, I don't want to say running on steam, but it would be some kind of a, yeah, big M cross. It legitimately looks correct if it doesn't go down again. To me, it looks like that would be probable even. Like, if this doesn't go all the way back down, I don't know why you would need to have the drop later. I think if it goes low, you're going to get a bigger move here, but then it's going to go down. It's going to respect the SOW. So it might just wholly depend on what we see after mid-year, going into October this year. Hyperactive rally followed by some kind of sell down into August. Not sure yet. We'll find out. If it goes low, or if there's an SOW here, it might even be something really subtle where this builds out like a range going, or excuse me, like a trend going up, and there's a sign of weakness on the trend. We can't know that until it happens. So there's going to be a lot of question marks here in the middle. I think that's the most difficult part. But we were just trying to see if this makes sense, and it does. This is correct. This is the most kind of level version of what we might expect. There's obvious stipulation there in that you have to have a kind of long term, you're going to have to, actually I didn't want to do that, sorry, because that's a different angle. Long term, you're going to have like a measured approach, like an outlook on this, where you're not thinking about it always horizontally, because sometimes waves are tricky. Like, that's why I said I don't like the sine wave tool, because it often will mislead you into thinking that something is like surefire going to go sideways, and it's not sideways always. Sometimes it's more down. Another thing we could do is look at the macro wave, which we did not do. So let's do that. So we looked at the micro, and it certainly seems like that is the right timing going into like summer or maybe a little bit later. Let's do the big picture timing. Yeah, that's the same thing. So that's double confirmation then. So there's a really decent chance that this period from, it's going to be an ugly 2026, I think. Even if it's kind of bullish, I think 2026 is going to be like a crappy zone. It's not that it's necessarily going to be horrible. It could be really bad. I mean, technically we could be way down here, before it's all said and done. If you look at the big picture wave, it's not like way out of the question, But I think realistically it's one of those two markers, not these other guys down here. So I think what's more likely is this 413. I think it might be down to 400, and then possibly, it seems ridiculous to me, but possibly as low as like this previous top. It seems a little crazy. But like reset completely. You guys are like, what? Now we're getting out there. I don't know, man. The reaction here isn't really like, it's not really that bad. If you look at the wave motion up, in a bullish market, this doesn't make any sense. But in a bearish market, that is the 50% mark. Like, it's totally normal. If there's some kind of an indication that that could happen, I think it's totally normal. So this to me really looks like a down zone. I mean, I don't know. What are your thoughts? Do you think there's any reason that we would go back and retest the COVID era? Because that looks like where it would be if it goes super, super, super low. because that's just like ear one, ear two, and ear two is like a 1, 2, 3, 4 kind of thing. So you'd have like a low with a hook here. It wouldn't be like the end of it. You'd have another upside that would do something like this, and then it would drop like off the face of the earth. It's just a chart, guys. But maybe we need something like this. I don't know. I'd love to see how Donald Trump's team spins this. They've been mostly like skirting around the issue of stocks. If it's really a global reset, it could take years of downside to really figure out what it's going to do. I mean, you may be long-term but bearish or bullish. I get that. But if you're really shaking up the market and it stands that this is what you expect, I mean, that you expect it to reshape the world economy, then it kind of makes sense that this might go back to 2020. I hate to be like that, but this is very simple to me. Like from a technical standpoint, this doesn't really look wrong because to me, it looks like the wave back down would be fairly similar to the wave up. Like if I look at most stocks in the market, and I'm just talking about an M cross, without going really high detail on it, the height of the first wave typically is somewhat similar to the height of the last wave. And if you set up pretty high, then it doesn't go down that low. You know, that's pretty normal. But like this is totally. Now that would be scary because it'd be like a macro SOW. I don't know if I like that. Maybe there's some other alternative here, like where this happens a lot faster and it comes down to this level instead, like the 360 level. Maybe a little more reasonable. But either one of those kind of makes sense. Because the COVID really jacked with everything. I mean, it was in some ways like a global reset point for a lot of things. We had a complete redefining of like American, and really all business culture and like work from home culture. And then if he really did all this, that does look like a macro level to, if you really want to reshape the world economy, that's kind of like where you would go, at least locally. I'm not going to go way beyond there, though. I don't think it's going to go below that. That'd be like ultimate bottom for me. So just in terms of like what this looks like, this is very, 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 very normal looking. I know that this is the S&P 500. I get it. I know I'm saying like you're thinking it's going to drop like 1,000,000,000%. Look, I can see the chart. I'm staring at it, right? I know that this is not normal for the S&P 500, but if I saw this on like any other chart, this would look completely normal to me. Like, yeah, that makes sense. It would come back here. This could be like a spring or something. And then you'd have some kind of ridiculous rally for the next like 2 years. You know, it takes you all the way back up to this, probably this anchor that we left right here. Back to like 700 or something ridiculous. It's like, it's a doubling. It goes from 350 or something like that. Yeah, about 350 to like 700. So it's 100% move. That all happened because the bond market was crashing. Well, that's starting to be a concern again. So prop it up and then let it dump. $350. I mean, there's more than one alternative here, right? So like, I know I'm being really extreme, But one of the other alternatives is also something that, again, looks fairly normal to me. That's what I was saying, probably go all the way back up to 700. It just depends on what happens, probably. These are not predetermined outcomes, in my opinion. I think they're just there, like they've been presented as options. This is the other one, and I'm kind of wondering, should be there. There is one. Good. There should be another trend that matches the top. The market likes to keep things kind of parallel and simple. So I'm guessing that COVID recovery happened right here. Let's see how far back this goes. That is a trend from the 2008 recovery, 2009 recovery. Right there. Yeah, so the market used this as a support. I mean, it ultimately took off from that zone. And then you can see that parallel lines up with where we got support at COVID. Maybe hard to see with all this stuff on the chart, but it's right there. I think that would be an alternative, potentially. It could be one of these things where it doesn't quite hold. Maybe there is a dump. You know, as an alternative, I'm trying to suggest like this is possible. That the market has kind of a more of a sideways period for a while. Probably what looks like you don't get quite to that bottom at first. It's usually how it works. And then you hit it later and you're like, oh, yay, it's over. And then there's some kind of massive capitulation and then it rallies. I don't know. It's just an idea. This is what you might expect, though, if it did something that's of that size, that it would have some kind of massive dip, and then the timing on that's correct. So I'm not going to worry too much about where that is anymore. Wave-wise, I think it's that simple. And then it recovers going into January 2027. Probably has some kind of massive bull run. You know what's interesting about stuff like this, looking on the macro level, is that you're talking about years out, but the chart dynamics are actually much the same as they are now. Like you wouldn't do anything any differently in the short term. I would look at this as a massive channel with a bottom here and then suggest that it's going to hit that top at that particular time based on the cross down. So what's interesting about this also is that even though this isn't normally how I do it, is that from a channel perspective, I'd go from where this COVID recovery was, and I'd probably try to cut through this bottom. And it's starting to look like it's right where we are right now, isn't it? Which it is. Okay. We're really close to it. It's like testing it. So this is a huge channel, the channel cross, which then presents this much like a gigantic wedge, like you're wedging up into the top of the channel. And I'm just kind of eyeballing some of this stuff. I know it's not perfect. That would be part of the breakdown too. So you'd use this as like an anchor, this little region. Ooh. That actually works pretty well if they do that dip into October. It doesn't go too low. It works well for both. So this is like a 50-50 wrap. Oh no, it is. Yeah, it is. I wonder if this is another 50-50 wrap. Oh, it totally is. It's perfect. Okay. Well, there you go. I mean, it doesn't have to be this way. Nobody's saying that, but geez Louise. That's a pretty massive like double flush through that anchor. The market will want to gravitate along something. If this is going to have big swings, it's probably going to be the whether or not we break down on this current trend here. And it looks to me like it started on that buy-in here on the main signal. So this is probably where the contention would be. So it's in the right spot for that kind of whip around. I just had to check it just to double check my eyeballs were working. And that does look right. So that's the 618 on the rebound. And then I'm not gonna lie, guys. It kind of makes me want to like get out of everything and just go into like S&P 500 calls. I think that's super dangerous, but here, Booksy, this is one possibility. I don't know, man. It makes a lot of sense. Everything's intertwined. It can't just be one thing. It has to make sense on like a big picture. The only thing that's kind of missing here is like world news type stuff. You'd have to have some kind of reason for these moves beyond just, oh, it could do this or it could do that. But even this makes sense. See, I placed it here thinking that it'd probably come back down to near this top or this May area. So specifically looking at May when I drew that line, which is kind of where we are right now, weirdly enough, right? It's like they're defining it even as we speak. Like the last 2 days have also defined this area. We're sitting right there. It's May 15th. That's the key date. Like that's the big one. It really is. It's kind of an anchor for a lot of these pivots, which makes, maybe that's why we're here, because we're going to go into May in this area. And perhaps we see that on May 14th, this finally like breaks out here and heads on up into June. And we're really protecting our positions from last year. All the profits that were taken, that's fine, it's whatever. But anything deviating now from a year ago in May, just like the March one, we saw the same thing. When you're looking backwards at, on AMC, we were talking about how like March was this weird kind of return back to stability. Like went right back to kind of where we thought it might go based on the previous year. I think the yearly cycle shouldn't be ignored because of those yearly candles, whatever, I don't use a yearly chart, but it would be something to consider. And this is like a 50-50 kind of wrap right now. I know I love using those 50-50s, but just look at it. It's perfect. I think this is pretty likely to happen. I think you're going to get a false rally. I don't know exactly when it starts, but maybe in like the last weekend of April or something. Probably with the 15th through the 24th, something like that. You're going to see some kind of a change. And then there'll be like a false rally that builds back out. And then by May, it pops and it goes. So what was curious to me about this, and I know I've spent like an hour and a half or whatever more, 2 hours, just kind of talking about this one chart, but I was trying to bring it back to what we were seeing on AMC. There's a lot of curiosity here on my part about what that would imply for AMC, right? On the one hand, it's like, well, does that mean that it's going to like hit a low and then go all the way up to 6 or 7? Look, if it goes down first and it's like this accelerated model, then I kind of think that might be the case. You may see something a little odd. It doesn't really make a lot of sense on AMC with the way this chart is set up to avoid being back up here in August. I got to say, like, that's kind of off here. Like, where is August in this? August is down on SPY. Well, yes and no. Like, we know that it's possible this could have like a big pump and then dump. But then that makes me kind of wonder, does AMC have something like that in store that's really just out there that doesn't make any sense to us. You know, I talked about this on balance volume needing to pump up. It's just not doing it. There's nothing here that has, at this point, convinced me that this has happened. But this looks like it needs to happen. And I'm sitting here staring at this chart now like, what if I'm wrong? And this actually goes like way high and then dumps all the way back down. Like, what if it goes way up in June? And we were seeing that on, we were seeing that on GME too. Like that possibility that it's actually going to flush to like 50 and then drop all the way to 17, which seemed way out there to me. But now I'm like looking at this chart and I'm like, I wonder if wasn't that what happened in March of 2000 and like May? But yeah, it's like it pumps really high, but that doesn't hold. And then it slides down again. So it's like another iterative motion. It's the same thing, but just really compressed. Didn't that happen here back in March 2020? It did. January, February, it goes back up. And then in March, it hit that peak. That's pretty similar because, oh, I see. That's pretty similar because in some of the models that I had, this is going to sound kind of bonkers, so you're going to have to forgive me if this sounds a little out there, more so than usual. I don't know if you guys, were any of you with me? That'd be amazing if you were. But if you were with me back then, if any of you were with me, I said something really, I guess it was kind of controversial, like, because I was really into the fractal stuff at the time. And what I said was that this was basically like January. And everybody was like, well, that's garbage then. And you know why I did that? Because at the time, I hadn't really gotten my brain around it yet. And I really was looking at this in a really different way. I got the price target right at the top. So if you're wondering like, well, did the outcome work out? Yeah, it worked out. I got the target right. And it wasn't just because it went all the way back up. Like it was based on wave and also on just measurements from the bottom, etc. Okay. But something interesting that happened back here was at the time, I supposed, this is going to sound really odd, but I had this idea that what we were going to do was that this was like a micro version of this. And so what I did, because I looked at like the big picture and I was like, oh, it's just distributing like the same way. So what I did is I took this and I like compressed it. And I also looked at how this measured out. This is what led me to the belief that there was a slingshot in March. So I remember it like it was yesterday because I did all the work. You probably don't remember it that much because it wasn't yesterday and you didn't necessarily do it. But I had thought that this was basically going to be like the same kind of move. And I remember because I posted on like social media or whatever, I said, I think that was the January move. And then somebody said like, well, if that was the January move, this isn't very strong. And at the time I thought to myself, no, they're not wrong. It isn't very strong. I said, I think that it's probably going to go up to only about 32 at the time. I was like $32. Part of the reason for that is actually pretty straightforward because I used this model as a slingshot and I did all this crap, and it's not crap, but in the end, it was a lot of work to kind of figure out that there was this 50-50 slingshot thing happening. And it used this motif, heavily studied it to determine where that top was going to be. based on that wave breakout, and I did the same thing here. Okay? There's a reason I'm saying this right now. Because what this was it was a repeat of what happened on the big breakout, but it was like hyper compressed. And it only ever came back up to that cross level that was broken down. If we see something similar for AMC and GME happening right now, it would be very similar to this, but it would be like hyper compressed. It would be like a really compressed version of the same thing. And again, you would probably expect, but how would you even measure that? Because I don't have any way of... Okay, that's right. Never mind. But here's the thing. Because like, here he goes again. It's an epiphany moment, I guess. But during this final break here, there's an important second comparison. I've missed the second comparison. So the first comparison was to March. This is when we backed up, which we're saying on SPY, it may look very similar to this, but on like a bigger scale, where it's not actually going to go yet, but it looks like it's going to go, and then it actually drops low again. But it's like compressed, like a really compressed version of all this, right? And so it's going to do this, but it's going to do it like hyper compressed, and then it's going to push out again in January. So this is, looking at this from that point of view, you would say this is like June, roughly May, June, and then this is like January, okay? That's obviously not the case. It's not, they aren't 6 months apart back then, but it's like a hyper compression of like these two areas here, like similar drop, similar rebound, back to similar levels, but you're just doing it right here, right? Instead of on a bigger scale. But AMC in that time period had a push, and then it went lower afterwards. And we know that because obviously it broke down and then it just continued to break down. But this is the beginning of the cat ear to the downside. So here's the second comparison. So the second comparison is this one, which is there was a similar motion that happened in a shrinking formation right here, which was a compression. I'm not really sure if I need all this stuff. I'm going to get rid of some of it so you can see better. I doubt I need it. I think I was just looking at this, talking about it, but I think I understand what I was doing. But there's a similar motion in the iterative nature of what happened here as well. Like looking back at this, there's a really simple triple build out here that it's not one-to-one, and I don't think it needs to be, but it's the same idea. Because at the end of the day, where they're going back to test levels ends up being the same markers. So I actually did an iteration 1, 2, and then I think I did a third down here. There's actually 3 of them. There's like 1, 2, 3. Every buy up is the same. They all go back to the same part relative to where they came from. There's this breakdown target that they continue to return to, and it's relative again to itself, the same every time. So each of these build outs essentially has the same goal in mind, regardless if the formation is like perfect, right? And then each of these is accelerating, which gives you eventually the breakout. But this compression then, this whole marker right here could be compared to the total. So this part is a shrinking that's happening between the cat ears, right? That could be compared to the whole, which I'm comparing to this, which is also a shrinking between the cat ears that could be compared to the whole. So it may seem a little confusing because the timing on this one doesn't really make a huge amount of sense in the end. Obviously, this didn't break out either because it has an SOW. So there's something to be said about that. In relative to itself, this has a massive cat ear. This is almost unusually ridiculous. Probably because of, in my opinion, and you might argue like, well, that doesn't make any sense. Well, I think it does, because if you think about the way the news went about, this could be an indeterminate period of time. it doesn't really have to be fast or slow. It could be as long or as quick as they want it to be, because if this were timing for the future on this bigger wave, this is an easy place where you've got like a long-term sideways motion that could technically still go either way, but you're determining which way it's going to go. It's a long test of liquidity back on a shelf. Really could have been really fast. We know that this is where ape was. Literally beginning to end of this ear is ape. So like, it's pretty fascinating that in and of itself, wherever this drops would then determine where you come back on a wave in the future. So because it took as long as it did, that determines like the future for the wave and how much time you may want to expend. Because again, you're spending time building a cause here for directional move down that you're then going to have an effect later. It actually makes sense to me that there'd be somehow like blocks of time built out into that. Like you're projecting time into the future by dragging this out. I think it could have been shorter. We don't know. It's possible that it could have been shorter, but it follows through anyways. So the point being is that it really is not inconsistent then to say that this could be a compressed version of the whole. In fact, it might even make more sense in some ways to do that in order to get that hike, because this did the same thing in 2020. It did a compressed version of the whole, right, in that last kind of build out in order to drive to look like a breakout. It was like the false rally here is just another like mini range that's built out in the lower 50% of the range. This is where you get the hike in OBV. So it's a micro version of the whole. Guess what? We're already doing that as we speak right now. And I don't know if you guys didn't notice or you just were like, didn't care, but like this is already like one gigantic shrinking of the whole. Like it's not perfect. It's not one-to-one perfectly, but this is definitely like that motif we always talk about. It's like I joke about it now because we talk about it so much. But I've said before, like I think this is legitimately like the fractal. If you're going to pick one thing, it's basically this. This is essentially like the macro big picture, like this is what's happening image, right? This is essentially exactly what we're getting down bottom. And I've kind of made that argument before that we might see something similar where we get like a build out, go up and then drop low, which is why I one time suggested going up to 14, then dropping back down to near 1 because of that. So big picture wise, you're probably like, well, I mean, you might be right, but then what does that mean here? I don't think this is inconsistent. I think this is very consistent because when we look at this, from that perspective, then the next iteration, the next action that we would expect to have happen, and this is kind of ugly, is the way it's compressed. But breakdown right there. The next iteration would be we'd have some kind of a cat ear formation. Remember what iterations are. They're like rinse repeat, right? They're rinse repeat of a similar, let's call it like a behavior pattern. They're not necessarily like going to look exactly the same every single time you look at them. This is essentially the exact same thing though. So this is the Judge Zern decision right here. The push out into December. This is the big sell down. And then we want to hike in OBV, don't we? What happened after that big S-curve sell down? This compressed till it did not make a lower low. It breaks out, goes to the top of the compression, which is right here after that big sell down, which for us is $4. And that is a massive spike in on-balance volume. It's the big buy-in. But it's smaller. It's smaller because the market hasn't actually made its bottom yet. So this now is coming full circle to basically just pat myself on the back, I guess, because at this point, it's almost unavoidable. The conclusion would have to be that, yeah, it went the other way. Like that, this is essentially correct. Like this is the big breakdown on the cat ears right here. There's really two parts to it, here and here. And then this is even crazier because if you think about this as an expansion, holy moly. You guys are like, well, I don't know what you're talking about. Think about it like as an expansion model. When I did the 2021 comparison, really 2022 is when I did it in March to this, I also talked about what happened when this expanded, like it unpacked. When it unpacked all these iterations, it did so like really systematically. There's actually a, man, I did like a whole chart for it. There was a setup that showed where each of these went to, each of these levels. And it unpacks at certain points of interest back to the ultimate top that it eventually made. And it's based on what happens like early on. You can see the unpacking, and there's a reaction that happens up into the top that's unpacking each of those iterations, which, you know, at that point you could just call it like a formula that's just unwinding, essentially. It's like, it's not that the formula is done. It's not giving you like an equal sign. It's really just like continuing what is the natural outcome. Market meltdown. Yeah, I'm seeing the red across the board. But we're kind of sitting at like flat on SPY, slightly down. That doesn't surprise me. Ah, man. I wish I could like put this into a bottle and just keep it on the shelf so that I could have this idea. It's a very weird, like complex idea to kind of toss around in some ways. And so the result is that this goes back up to the preliminary level of, I don't know how I didn't see that before, but now I see it pretty clearly. That motion right there. This being the bounce in. This is the prelim. And we came up right to the smack dab center of those. Like right to the middle of these. Which to us is right here. Which I kept saying, like, I don't know why we're not there, but we haven't yet gone back up to target the $4 marker. That's that drop-in value right here. It's essentially the same as this drop-in value right there, which is where we kind of pumped to on that big pump up that we had. This is just going to be like a hyper-compressed version of it that I don't think it means that it's over. I think it means that that's like the, again, like that's the Judge Zern kind of end of the fractal kind of business. Weirdly, that could continue almost indefinitely until the end. So it's a strange thing to think about this as a, oh, this is like a rinse repeat, but it isn't also in my opinion. Is why I was saying like we're missing that real upthrust, like the buyer's remorse upthrust, the one that gets people all excited and then pulls the rug like really hard. Based on the way that happened last year, it may actually be near the same date. But I think we might even be able to do it proportionally. We may not have to guess. That's why this fake out was so effective. It's the same fake out that happened here. Here's the good news about this, guys. The last time this happened was leading into the big squeeze. The last time we saw something of this kind of scale, it is not bad. Like, I know I've looked at this every which way. I get that, and I get sometimes it can be a little discouraging to like have to kind of do it again. But this is not bad. This is legit. The only other time this has really happened, the way this is happening, is when this thing fell out going into COVID, which again is very consistent with what we're seeing on SPY, like that it's iterating further. The difference is that build out. AMC built out into a spring and SPY did not. But they're both in some ways very similar in this regard because they both have the potential now to reach all-time highs by February 2026 and then have a subsequent fallout from there on after. But in order to get there, you have to get into that point where it no longer does what it's done before. So then how did we measure it out? And this is going to be the big question. How do we measure it out? Like, why did we think that it was going to work as it did when it broke out? Because I did. I don't know exactly how I did it, but I did it. It's right where it's supposed to be, guys. It's the same marker. It's that 360 to 3. I mean, it really is exactly the same. It's this area right here, which is where we already thought it might go. And I know it's not really encouraging because you're probably hoping for something really huge. That's the end of the cat ear, though. And that tells me something else about the market, which I didn't really think about before, which is the double. I don't want to get into that right now. There's a second wave here, like an up, down, up wave right here, which I already knew, but like I didn't really think about it that much. And now I'm like thinking about it a lot all of a sudden. I need to make a really quick note on the chart so I can remember to come back to it. I think that the cat ear predicts two things. Based on what we found on AMC, I think it can tell you where the bottom and the top might be in the future. And I've only really used it, I mean, I've used it for the bottom before some. But I've not really used it the way I'm thinking about it all of a sudden. You need to do this because this could be a huge deal. Second ear wave down has a double creek cross, one pointing up, one to the wave, to the next wave top, which I already know that's pretty consistent. The second to the spring. And that's what I don't know. I'm going to make a note about that. Because we might actually, I know this sounds really weird, but just based on what I just thought in my head, I'm moving forward now on this, is that this may actually tell us where that, I think it's right here. I think it's like right in the chart already. But this may actually tell us where the spring is, right there. And it's based on the overlapping waves and like what this represents in terms of support and resistance for not just bulls, but also for the bears. It's going to be tricky with this because there's probably more than one. But I want to kind of keep going what we're doing now too, so not sure which one it is. All right, that'll be really important though. I think that's going to help us because I'm trying to remember what it is that I found here that helped me to know it was the bottom, and I'm not really sure. But what we would expect then, if we're using this as kind of just a general guide, again, I don't like to use this stuff like one-to-one. Not like, oh, this is up, this is down, this is up, this is down. But I think using it as a way of understanding a range is fine. And that's what I'm going to do. So in understanding this as a range, if this pops and it bleeds really hard, really fast, maybe it goes higher than expected, so it goes to like 4. When it bleeds back down, it would settle on top of this ear, which is the same thing that happened here before it does it again. So the Judge Zern, quote unquote, position for that sell down is also really important. So the variable is at it's 286, 288. So the floor, maybe it's not 1-to-1, but you basically could look at it like this, is that there would be a floor here, and then roughly, around June, that's kind of like where everybody would expect it to be going. It really is like backwards. But that's correct, because that's the cat ear. You would expect 1 and then shrink, 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 and then 2 would have a 4 top. 1, 2, 3, 4, and it's right there. So it's the second, it's another second ear. It's like weird because it's already, you're like, well, it's already had 1. Yeah, but the waves on the breakdowns just keep doing it until they don't. So it's almost like you keep having smaller and smaller and smaller second ears. But we looked at this before, and I made an argument that if you go back to 2020, the second ear is not actually that second pointy top. That's actually where it begins, that the second ear is actually here, and it should be coming up to this parallel and trying to break it, and it won't break it. And that's where it has a second breakout, and then people think it's going to go, because it would be like here there'd be an SOW, and then it would look like it's going to go again, probably in June, coming off of May 28th. And you're like, well, why couldn't it just go? Because I think this is not what people think it would be. I think people would expect this to be like the breakout and then the big move. But I think what you're going to see is that the OBV gets super hiked up. Like there's this astronomically high volume move here. And then as it goes down, it will not build out like this one. If it does the same thing, and it looks like it's even on that level, it's kind of genius. It's kind of disgusting, but it's like it's on the same level. So it would look the same to everybody. Everybody would think that it's going to break out and have this run. And there would be a run up. I mean, there'd be a run up here. But if it's bearish, you'll have something similar. If it's bullish, you won't. It'll look more like this, where it has like a nice build out. But if it's bearish, it's going to stay like low. You're going to get like up thrusts, and you're going to get lower lows. And it's essentially going to like flatten out. And then at the very last second, it's going to look like it breaks out. But then it doesn't break out. It actually reverses hard. And this is where you get another big sell down, and this is where we actually see that this falls perfectly in line with what we were saying before, because the resulting action should be a sell down through this previous floor. But notice that this didn't happen on the bigger picture until now, which is why iterations are so ridiculously tricky, because they're still fulfilling like the bigger picture while the smaller picture is fulfilling. So there's no more information about this. If this was the end of the fractal, you would just say, okay, well, it's going to do it again, great, but it never went to a lower low. So does that mean it's just next time it's not going to go to a lower low either? Guess what? It totally could, because at some point it's going to hit a point of no return where this no longer makes sense to do it. And they have to make a decision about whether they're going to continue to not make lower lows, or they're going to finally make a lower low. Does that make sense? Because at some point, it's like the algorithm that runs it cannot continue to do the same thing. It's not possible. It can't do it. If it just continued to do the same thing indefinitely, it would never make a lower low. It would just keep compressing infinitely into a particular point that's slightly lower each time, but never, like, it approaches the bottom, but it never gets there. Which makes sense, because it's like you're going towards it, but then it breaks out. You're going towards it, but then it breaks out. You're going towards it, but then you break out until you don't. That's where the spring actually happens, because this is a big hike in OBV. And then you finally get like a big moment of capitulation. It dumps the on balance volume. So again, you'd have like a similar motion of walk down. So this is going to be like a mini April right here, which actually makes sense because this will be like a mini version of things. I don't know if it's going to happen in the same exact time. It might be pretty darn similar, but you'd have like a mini version of April right here. I think it'll be sooner than later. I think it's going to be going into April. Because it'll look like the timing's basically the same. So right around April 15th or so, you'll have a breakout. That's the smallest iteration here. And again, it looks like the shrinking iteration is done here on the cat ears because it is 1, 2, 3, and then 4. This is the fourth drawdown, but the fourth drawdown may not be successful. It may not go to a lower low, which is actually the way that I thought about it earlier, is that it probably would not go to a lower low. Everybody on my Discord was, not everybody, a lot of people on my Discord were saying it was going to go ahead and double bottom. And I said, I don't think it's going to do that. I think it's going to get really close, but it's not going to do it because they're probably going to take it down and it's going to have a change of character because they've run out of sellers and they're going to take it up and hike the on balance volume. So you're going to get it 1, 2. This is the same exact idea. Compression, compression, compression. And then when that compression is done, you're going to see that it didn't actually make like a lower low. It got close, might get close. Maybe it gets a double bottom. But if it doesn't make a lower low here, that compression completes, it's going to pop to the upside and go pretty hard, pretty fast, all the way back up to like 380 or 4. It may not go, unfortunately, beyond 360, but I think it might go ahead and make the extension. It'll go higher than needed, and then it'll slide back down really fast through here. And then drop down. And this is the tricky thing is that, again, you might think like, oh, it's going down, it's shrinking. It should just explode and go to the upside and never look back. Not so, because the iterations aren't actually done. So then it does it again, the same exact thing. And this time when it comes back down, everybody's pissed off because it like flattens out, but people are still thinking it's going to go because so-and-so said it's going to go in May and June, which it did look like early on that might happen. But actually, if this iteration continues, it has the same effect here. It still would build back out, and then you're going to go down low, and you get really close to the bottom. And this time, guess what? It probably comes down to a place where it almost makes a new low again, and it does it again. But the compression is at a place in this point where it's going to be like crazy hyperbolic. So you have some kind of like massive move back to the upside, but it will only check, just like the previous one did here, it's only going to come back and check the wave down because they're going to walk it down. And each compression has done the same thing, so it's going to walk it back to the previous wave. So it'd be something like this, where you'd get like a pop all of a sudden, and you'd be like, whoa, a big pop, right? And then it's going to dump back through. And at some point, this is where it like gets tricky, but at some point, probably somewhere around the same place we are now, frankly, at like 250, it's going to capitulate. And it's going to just like drop off the face of the earth and go down to the actual spring, which unfortunately, and I don't know, my timing might be a little off on this, but I think it's going to be pretty nasty. I want to say when we measured it out, we found that there was a strong likelihood that it was somewhere in this time period right here around July. Yeah, it makes sense it would be pretty small. I don't know why I made it as big as I made it. I just was drawing it, so I was just doodling it. It would make sense if this is pretty small. So it's going to look like it does the same thing again. Compresses right around 250. There'll be one final up thrust, and then it'll just dump. And then, this is the good news, then the outworking begins, because in each of these instances, you're going to have a build out that then starts to jump creek after creek after creek after creek. Because this is where things get really fascinating if you're interested in that kind of stuff. Because usually what happens is whatever the first one does is actually kind of mirrored later. So if the first one has like a breakout here, we were kind of using these parallels. There might be a whole new set of parallels, right? So if there's a whole new set of parallels, we'll figure them out later. They'll probably be even steeper every time. So I made them like not very steep. They'd probably be ridiculously steep every time, like getting steeper and steeper. That usually is what happens. So those parallels will like work themselves out until you kind of get to that point where you're actually breaking out of the main body here. And that's the craziest part about all this is if you're not following and you're just kind of like, I don't get what you're even doing here, is that as this goes, these compressions have been creating these like creek bodies going down. And on the way out, once you do the first, you're just kind of like check, 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 and then you're done. And you just go. And that's where you get this like massive, massive move that seems to come out of nowhere. But this is the good news, right? The good news is if this is a micro version of the macro chart, and I think that it is, then what happens on the micro eventually works its way back up to the macro. And if you look at this big picture and you see this as like a micro version of a macro chart, and you look at this and you say, okay, well, I think it could go back up to here, right? Or wherever, right? You're triangulating whatever the drop zone might be, you know, at whatever particular time you think it's going to happen. What we would determine is that essentially like that's what's going to happen on the big picture as well. So there should be evidence somewhere in here, and I don't know exactly where it is, but there would be evidence somewhere in here that this is going to triangulate here, probably somewhere in June, July, or July. And that's where that build out goes, because on the big picture, we expect a similar triangulation to occur. And this is where it gets kind of dicey, but because we'd have to go back and look at like maybe the better triangulation is here to something else. Anyways, this is going to take me forever to do it if I do it right now, so I'm going to stop. But because I'd have to work layer to layer, and I'm not going to be able to do that right there. No, it's going to take too long. But it's a similar triangulation. So you see how like this breakdown right here is if it's a iterative shrinking, and eventually this breaks up and stops shrinking after a capitulation and reverses, and it goes back above the previous, however small it might be, it sends a signal that we're buying in. That signal is then replicated over and over and over again as it's expanding outward. So if the goal here, and we think that it might be, oh, Tesla is dumping. I should have just stayed in that put position, man. It's like way down here, going into the dirt. It's not holding the creek breakout, which is bad because this was like a widening. It's ugly. I mean, I thought it might come down here anyways, but this is looking really ugly. Ugh. I think that I bought a put this morning and I didn't hold on to it. So that's my own fault, I guess. I think, though, this is the correct line of thinking, because in the end, that wave that we're expecting here to eventually like follow through would have to do so on like the small scale first. And that builds out like the larger structure, like the larger pattern. So the follow through, man, it's tricky. I tried to do this before, but I couldn't get it right. I didn't get it right. So it makes me wonder, like, what makes you think it's getting it right now? I'm not sure. I guess it'd be there, because it should be going up above that marker, which does make sense, because it's up above the mark here. doesn't make sense. I wonder if this stays really low. Is the height of that, because if this only comes up to, boy, that would piss so many people off. Probably drop like 1,000 subscribers. It would make so many people mad. There's a problem, which is that if the measurements here are fine, the bigger measurements, but the smaller scale could be unexpectedly bad. It seems a little crazy, but if there's like a weakness here, it could be that this never goes up past like $8 or $9. Which seems ridiculous. I'm not saying never, but I'm saying like initially. It seems a little out there to me because I'm like, well, why not, you know? But then I thought about it for a minute and I'm like, you know, on the grand scheme of things, this is where we stopped. And we refused to go above this level. And this is also back into the previous trend. So it's not exactly like rocket science to sit here and say, well, I don't know if it's going to break that. This is all distributive. Everything else that happens to that point. And that is the first reaction. So it isn't the right measurement. I think I just assumed that it was going to go the full distance right away. Well, that's a big assumption. I think I had assumed it's going to go the whole distance. It's in the right spot to do it, all the way back up to 12. But if it doesn't, I could change a lot of things for us long term. Like a lot. It does seem like this is the most likely region. This is where the distribution creek is. 1, 2, 3, 4, 5, 6, 7 times, maybe even 8 in the last 3 or 4 years. So you can see like between these two markers, and that is right where it needs to be at that time. So it's not inconsistent. Everything is consistent. Well, one of the things that I'm like, oh, kind of stopping and thinking about is, what about this guy? Because this doesn't have a consistent marker. Usually like the bull trend matches. Man, Tesla's like dead. I should have stayed in that put. I knew it was a bad idea to get out too quick. What else is new here? I guess we'll see. I mean, that certainly looks like something that was used. We probably used it as a breakdown, as like widening along it. I'm not chasing anything. I'm just screwed already. Actually, this is consistent with what we would expect, because usually the trajectory out, it's top, bottom, or middle, and you can use all three if you want, but there's usually at least one that makes the most sense. This one has ties to the beginning back here. This makes the most sense. This is the slingshot building out. I think my only concern right now is this, which is, I mean, it is a concern. There could be a secondary point of stopping, like underneath this at like 8, which it doesn't make a lot of sense, but if the market it's usually in line with some other level. I don't know. I feel like you need an SOS there, but I mean, everything else kind of works. Maybe this is just used on the second bounce or something as like the level to get over. Should be like a reaccumulation or something like that. It's not high enough though, but I had also speculated that this arc may be wrong. I've said that before, that it may be that this is actually at an angle. I have it very horizontal. The way this built out, it could actually be because of that, weirdly enough, but because of that shift in the chart, this may actually be like steeper as sort of a corrective measure. So instead of being up here, it's like down here. And I don't really know how to prove it or disprove it, so I just kind of never talk about it because I think I mentioned it like once that seemed like a possibility. It was mostly because of this, because these were lower, they didn't come back up again. I felt like it didn't match 1-to-1 at all. It looked like it was a little off. So I sort of speculated that it might be a little more diagonal, which would indicate again that this may not be horizontal. It may actually be downward a bit. It doesn't change necessarily how high you go, but it could change where you break out from after that, which could be considerably lower than $12. It may be down here. And that would make sense because, again, the bigger picture creeks certainly suggest that you wouldn't be way up there. That'd be like above it. It'd be like, have to be here. So, yeah, you may not break out at a higher level at all. So, I don't know. August is going to be an interesting time period. This doesn't line up with what we see on SPY also. But maybe it doesn't have to. It's almost backwards, but it kind of looks like the opposite. Like the relationship is flipped. How's Tesla looking? I mean, short term, it's okay. It hasn't made a lower low yet. This pushed higher, so, you know, my big concern was, I mean, you don't want a secondary upthrust. There wasn't one. I thought it looks like it went right between my two markings, which is always fun. I love when that just looks like an idiot because it didn't actually break out. I mean, it didn't take off. You can see it attempted to, and then it rejected off this kind of midline and just dropped back down. So it's just building out a bottom potentially. It looks like a 1, 2, 3, 4. It did make a higher high here. It pushed above that previous top. So in theory, like it could be a distribution if it made a lower low, but I think it's honestly like a double bottom type deal. Like it looks like a quadruple flush, 1, 2, 3, 4. So usually if that's the case, usually this last bottom is the breakout and goes back up. I had done a lot of work on this thinking that it's probably going to go up to, so it's essentially like this move right here. except it's lower. I thought this is probably going to go back up to at least 261, maybe as high as 278, but I think that's as far as it's going to go. So if tomorrow or even end of the day today, you see it breaking out, so be it. It's totally possible that this is going to be at 261 by the time noon comes around on Wednesday. Honest to goodness, I would not put a lot into that being bullish at the moment, but there is a widening downward here. So if it breaks down after that, you're looking at pretty low. I mean, this is like a really bearish, extreme bearish sentiment. That's like it hooks again and it just doesn't break out. Then I think it's going to go down to like 150s. It's going to be really ugly. I'm saying that not to like discourage anybody, but just to tell you like it's actually not as bad as it looks. It looks like it's having trouble for sure. But to me, it looks like it's ready to come back up towards 160 or 262. And on a big picture, there's really no reason to not do that. There's a really key level here. This is the widening, this little dotted line going up. This is the widening that hasn't been hit. So it hasn't been officially tested against. So it checked it here, resisted, and then it did this big like whip around motion. But when it dropped off from it, it never, it didn't do like a back test. It doesn't mean that it's going to run after that point. It just means like it didn't ever do a back test. If it does run after that point, I think it's probably going to go to 300, near 309 to 320, because there's a bigger creek that's just, again, it's just not being checked. It's not really complicated, you know, like this level right here at 262 is like an anchor. There's a widening going down here. So if it breaks out, I do think you have a possibility of making a new high locally over 291. There's a historic drop zone right here from right when we had that February drop back at 306. And then you can see like, I don't want to say it's the best triangulation in the world, but there is another triangulation here that goes back up to where that drop started. And that level is here around Thursday the 10th at 322. That would be insane. But it's not impossible because it technically would be bearish after that anyways. It'd be like a massive hook. It's also like a 50-50 up above that 262, which is where that big macro widening is happening. And you compare that to what we're talking about on SPY, it's not as ridiculous as it may sound. It would be like if the S&P 500, it has a widening as well that it kind of left behind. So it seems really silly because it seems like, why would you go up there? Like there's no good news that could get you up there. The tariff news isn't going to be good, blah, 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 blah. I get it. But this reaction is like reacting back to really retest some of these other drops that happened. So this is from November 2024 through the top, right? And then you can see the other checks that we were talking about. They're all the way up at like 550s to 560s. Tesla's not that different. It's just the lines are in slightly different places. And so like big picture, Tesla looks kind of nasty. I'm not going to lie. It looks like it's going to come really low at some point. It's making a weakness right here in that it keeps popping below this big creek. So it kind of looks bullish because it's like, oh, there's a big M cross here, right? I don't think it's done. I think it's missing a back test here. And then it looks to me like you'd probably come back down because there's a, like right now, there's a pretty big disconnect between the price and like RSI. RSI is getting really overbought really fast. And then when you look at the overall market, it's like, this is a widening. So this widening, as you can see, there's two ways to draw it. The white lines going up, and then I got this yellow dotted line, which I'm not a big fan of the dotted lines on here, but it's this big yellow line. This is anchored on these 2 points right here. So this is, again, from June 2024 through August 2024. All right. Going backwards, June, April, May, June 2024, right here, August. That's the same place that we're like kind of testing stuff right now. Like there's a lot of interesting comparisons that could be drawn, right, between these. So I don't see it as necessarily like they have to be 1-to-1, more like they're respectively testing certain backdrops pretty efficiently. And right now we're beneath that one, and SPY is above it. And I think if SPY had a reaction, we'd at least hit that, which is 261, right? But there's other markers here. So again, I don't want to get into like every single possible wave. But the one I just did on SPY, like a big reaction back up to even just 530, certainly looks like it's retesting. It would be a retest. So that'd be locally, not like way off in the distance. So I kind of have it like here, but maybe something like this. Like a big pump up to 536 would accomplish the same thing as Tesla coming back up to 261. So it seems very likely to me that that is where we're going to be on Wednesday, is like 261. Whether or not the rest of that hits, I don't know. Does SPY just go straight into like a new breakout, or does it do what we think it might do and wait a little longer? I don't know. You know, sometimes the S&P 500, in all of its wisdom, it may have a move that's earlier than we expect. Like maybe building out here and have an earlier move that just kind of chops. We don't know. There's nothing really to say about that except this is roughly the placement of the waves. Well, if this happens here, I don't see why Tesla can't have a similar kind of rebound, like a fake rally. And to me, the level's kind of obvious. It's probably going to go up to, you know, I think earnings is over here in April. It's probably going to go up to 300 if it does that. But maybe it's weaker. I don't know. This is a big question. And I'm kind of getting sick of Tesla right now as my calls got cooked and they didn't move at all this morning. It was up 9%. And they didn't budge. So I'm pretty upset by that. If there's weakness here, maybe this goes up to the top like we're expecting here on SPY, and SPY drops, but it doesn't ultimately come down, makes a new low. So I'm just showing you like a weaker model of this, the same idea. So it goes up and checks that level, and then it braces for a buyback in March or in May. And then you get a big buyback in May. Tesla might be something similar, you know, working itself out into its earnings report. But who knows, you know? If the market is selling off, I don't see why Tesla has to hold up. So it could easily go up to near the top here and then start to sell back down and come pretty low and then go up to 300 or whatever later. So it would look probably more akin to like this if that happened. I would not be overly bullish on Tesla in the coming days. And honestly, this isn't much of a play anyways, unless you get in at the perfectly right time, because again, if the options are the way they are right now, you're not going to get any money from it, which I'm pretty irritated about. I told you guys earlier. It went up 8.5% and I lost value in my bullish calls, which is ridiculous. And I did enter bear calls, and now I'm like kicking myself for not just holding on to them. So here's my thoughts, all right? Let's just summarize it. Been a long kind of 2 or 3 hours here. I think the market's going to have maybe some pretty big moves coming up, but I do ultimately believe that most of these are going to be like false rallies to the upside, probably starting in May. We've got earnings season, banks, etc. And I think you're going to have like some build out. Probably what we're going to see is some kind of a spike maybe next week. A lot of it's going to depend on tomorrow. I do think stocks, and this is looking like it's getting ready to try to go for lows, so it's looking pretty bad. I do think stocks are going to, I'm really irritated now. Sorry, guys. My positions got cooked, which I already knew, but I'm pretty irritated that I didn't hold that put position. It's always like right when I started, right here, right when I started streaming. Stop looking at it. Anyways. We ended up coming back down here. So silly. Geez Louise. I knew it was going to go 219. In the end, I think you're looking at shrinking iteration, some kind of a pop in April, May, and then I don't think it's going to be as bullish as everyone else thinks it might be. I would be surprised. I actually don't see it as likely because of the lack of convincing buy-in and sell down on AMC. I think the on-balance volume is way, way, way too high. So it's not dropping enough. It's not had that big drop. I just don't see it. So, maybe, you can disagree. Maybe this is like a spring for on-balance volume, but either way, you're going to know soon. Like if you bought in now and it went up to 350, you're going to know. The difference between a distribution and accumulation at this point should be pretty obvious to people. Accumulation will be nice and arched. You'll have pretty low volume tops. You'll get those bounces where there's a sharp bottom. You'll make higher lows. You will not have these kind of U-shaped spikes with really high volume tops. And if that happens, I just think it's going to be a delayed action. I really do. I'm not even positive that this is going to be as fast as I'm saying, but there is evidence to suggest this breaks out by around July. I don't see it going to 50 anymore, but that's because by nature of understanding the shift that's happened, if it got to 50, I think we'd be really fortunate. I do think that what's more likely is that we're going to come back to this floor at 35. I used to think it was going to come up to like 70, 80 bucks. But I just don't think that anymore. And for whatever it's worth, you might get annoyed by that, but if this ends up dropping to like 180 and it goes all the way up to that point, that's a 2,000% move. So there's going to be people that are upset no matter what happens. But this is just setting up different. It's lower. It's certainly not in a position where it looks like it has to break out. Big picture is a little different for AMC. That's a long-term chart. If the theory is, and I might be right about it, we'll see. And I think there's good reason to think this. February 2026. By that point. Maybe not at that point, but somewhere by that point. That's the wavelength. It's where it needs to be. The market's confirming that as a likely place. I think you're going to go into a sell down period, but after that. But I do think that there's a good chance it gets up there. And then, honestly, at that point, we would have to come back and try to check it out later. But there's going to be another pretty big creek that we jump that we don't have. And I don't want to get like into nitty gritty about this too much. But it will have to come back to that creek. So if you're talking about like when 50, like if this breakout happens, then the floor is pretty much exactly where it is now. I do think that it's possible that if nothing changes, 2026 could be a pretty bad year. And if that's the case, market condition wise, like we could end up right back down over time at 27, down to like 350 or something pretty easily. Especially if it doesn't do any of those big checks right here. We'll be in kind of big trouble. It might seem unfair, it might seem a little complex, like why would that happen? But if you look at the bigger picture here, it makes sense. You'd have some kind of macro creek right here that you'd have to come back to. The only thing I can tell you with certainty is that at this point, if this happens, and this if-then statements, we hit 35 to 42, we go back down. I think you're in a good place to argue that we're more accurately priced. That you're positioned for a good move, more like horizontally. But like long term, what would need to happen here on the bigger picture is that this would have to break out of like another macro trend. So I don't have this one on the chart right this second, but there's a bigger trend here that goes down through the floors. And this trend would be on the top as well. So this does line up with everything else we've seen. It should line up, and this would cut through the January move. Again, if you go and you use this bottom trend and you use it going out to where we broke out, it's the same exact place and time here that we would need to cross the creek. No, I don't think it's an accident. I think that's probably by design. If you're going to get there, you're trying to build up momentum to get there. It's the exact same intersection here in like August. It's a 2-year cycle. But then you go to the top, and the top 50% being up here, also exactly kind of where you need to be. Again, maybe if there's an extension, it could go a little bit beyond. You could see this pushing up to like 57. So there's some hope for you right there, some hopium. So it could break into that area. But on the whole, I think when you do the 50-50 measure, it actually, I think it more accurately reads, if I'm not mistaken, and I'd have to do like an actual trend. I think it more accurately read to like the 61 top, not the 72 top. Anyways, it's somewhere around there. But if you go and you look at the big picture here, like, yeah, it's possible this could be up there in that zone right there in 2026. If this is where it needs to go in order to regain support, does it go there all at once? I really don't know. That's a whole nother question. If we just have a rinse repeat of what happened previously, then your expectations should be based on this trend right here, the one we just drew. Like your and my expectations would be based on this. Oh, look at that. It's triangulating there too. That's the triple triangulation right there near September, which is when we came down here. So the idea would maybe be that you come down and I don't really know. I guess in this case, it's kind of high. Doesn't really match either. Maybe there's a lower one because I did use the middle. There could be a bottom one. It should be in the same zone though. Like it would match with some previous level anyways. You would maybe expect something like this to come back. And I don't know. I don't know what happens. That's way too far in the future. 2029 is debt maturity. I mean, we really have no idea. if you wanted to see a breakout at some point, this is going to have to come back up and go to jump this particular widening. And you can see like that trend. If this is like a 1, 2, 3, 4, 5, then you could be in big trouble. You know, a bearish impulse doesn't really make this look very friendly, does it? But here's what I would say is that it's possible, it doesn't seem likely for some reasons, but it is possible that over time, because this push below here, we just talked about it on the other stock, we just did it in reverse. Because this push below, it could have been like a sort of a sign of strength. This looks like an ABC correction, and then this would be like a really long wave 3. And then a 4 could be really boring. You know, so hard to say. I don't know. This is a little far off in the future, but, and that doesn't even really look right. 4 shouldn't come below 1. That'd be like us stopping at 12 and never going forward. But it's just, it's kind of dependent on whether certain things are checked. If this creek is never checked, I'm probably going to be kind of bearish. And I don't know if I'm going to be here for another 5 years, but sorry, I'm like, that's really far off. But then I maybe expect it to come back to like $1.50 or something again. And this would be like a huge distribution, 1, 2, or accumulation, I should say. And then if it's really bullish, 2029, I think is probably when that stuff happens. It's really hard to tell. But yeah, maybe. I mean, it adds up. When you look at the bigger picture, it's not really like a short-term thing at all. It's very much a long-term thing. So, but if you look at the big picture, it adds up to coming back to that top. But way off in the future, you know, not now. This looks like a big version of like what happened over here, you know, which is the way I think we'd probably be wise to look at it. More like this. You'd have some kind of massive drop and then a sign of strength that comes back up and then blah, 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 blah. Flip the chart back around. This seems pretty likely to me if it's going to be long-term bullish. And weirdly enough, it's just like another version of the top, but smaller. So that's neither here nor there yet. It's a little far off. But yeah, I mean, eventually, do I think this could squeeze up there and go retest the original valuations? Sure. And it's an unreasonable looking move when you think it's going to go to $200. But if you think about the original valuations, they were up that high. I mean, there's evidence that that could happen. Come back up there. I mean, it just keeps going. Could break out there. Could just stop. Could be the end of an era. Maybe they reset the chart again and it's back to like $9 to $12 when it's back here, and that's where it's supposed to be, and the retail movement's done, you know? And it's just this crazy, massive move in the middle. Tomorrow's going to be green. New VIX top, 30-minute and 2-hour will be divergent. That's a good sign, yeah, that there'll be a buy-in. Daily is still, looks like it's oversold on SPY. So And it did come back down pretty far after that candle. So we may just be, again, going back to test lows. I'm not particularly surprised. I just didn't think it was going to go up and do kind of the reverse. This looks like a weird Frankenstein version of what I thought was going to happen. This is super strange. I'm like so annoyed by this chart right now. Yeah, the market is just all over the place. So I'm not really doing a good job of catching the moves. And probably better just to focus on a long-term outlook. If this breaks out tomorrow, it's got to do it pretty early because noon is when that tariff announcement is, and I don't know how that could be positive. I just don't see it. Unless he comes out and says, hey, we are going to be pausing tariffs on like half the nations that came forward. At least not the 10% ones, but at least the bigger ones, because we're in negotiations. But he already said pretty adamantly that he doesn't think he's going to do that, so that they're going to hold them firmly regardless of negotiations. So it's essentially like a pain on approach. We're just going to torture people until they give us what we want, which is kind of horrible, but that's what it sounds like. So sure, like this could be a narrowing that then breaks out. I mean, it has that vibe to it. Breaks out here, heads back up. I just don't see it as what a strange chart, man. 1, 2, 3, 4. I know what this is. I know it's supposed to be like an M cross, but it did not actually hold the level. So it has to break out again in order to be bullish. It has to come back above. I'm starting to think it probably doesn't go beyond here. So it'd have to come above, hold this, and then break out to the upside. I'm not sure if there's even evidence for that. It's weird because it didn't jump the other creek. Maybe there'll be some fake news or something again. I don't know. At some point, if it's going to go back up, it has to do that. Because if it's low, I'd be pretty nervous about it just spiking and dropping. Like, this is kind of what I thought might happen here, and it's setting up very similarly. So we ended up just kind of triangulating it from a different angle. Instead of approaching it low, we approached it high. Otherwise, it's essentially the same. So yeah, if it dumps, it's going to be going down really far. Maybe that's the design here. It's to make you uncertain. And I don't know, maybe it's some kind of Franken version of this. Maybe it does actually pump all the way up and then it dumps all the way down, you know? And then it goes like rocketing down. I really can't say. Trying to predict what Donald Trump's going to do is not possible. Yeah, maybe. I could see that as like a distribution mode, but you come back up really fast and unload your shares and then pull the rug. Pull the rug right at noon or shortly after he starts talking. I do know one thing is that I'm probably not going to get anything from these call options because once again, they're waiting. There's nothing going on in regular trading hours. If this thing gaps up and just goes, probably going to get nothing for them. I'm pretty bitter about it. But the RSI looks like it's in a good place to kind of rebound here. There's plenty of room. Did make a higher low. It still, to me, looks like it could be a local bottom. So, I mean, there's possibility that this doesn't go the way I think it's going to go, and it doesn't have this big flush. If that happens, and it's going to have to be some kind of a massive squeeze moment, but I don't really see a lot of evidence that this would be way up there, except for that one triangulation here. There's not really much evidence that this would be way up there by the end of the week. If this were another time with another stock, I would probably say that this looks really bullish because it does have that appearance of a creek jump. It's just really steep. Is there anything else at all? Maybe. There certainly were a lot of grabs on that line right here to try to like hold it. It didn't work out. If this hits 320 by Thursday, I'm going to be a very different mood. I don't think it's possible, but part of me wonders if that triangulation ends up being like a pivot instead, like a low. You know, we've seen that before where like it's like a high pivot mark and then it actually ends up being like the bottom. So it does something crazy like dumps to like 150 or 60 and then that ends up being the low and then the rest of it's rebounding into May earnings or something like that. So it's like the opposite. Gosh, right now it just looks like it could be distributive. So that's all I got to say. The 1, 2, 3, 4 isn't the problem. This typically could be very bullish. I mean, we see this kind of stuff on AMC. These big spikes, stays elevated, buys back down, and then it buys up. But even if you thought it was bullish, you couldn't really make that call until it jumps back over the top right here. Because, like, it also looks like a potential cat ear. The volume on it is strange. It's high volume here, decently high volume on this top, high volume sell off. All that would take is a hook. It would just take like a hook here and then it could dump. So it's like, it hasn't made the low yet. That's the only reason I can be like, maybe it won't hook. And if it doesn't hook, with our luck, they won't even give us an answer until noon. So we won't even get an answer. It won't go up. But yeah, maybe. I'm going to say that SPY is probably the same. I'm not even looking at the chart, but it's probably the same. Yeah, this looks even weirder, but I mean, it is what it is. I mean, you can see it here, like the 1 hour jumped up and over, it's like you can just sort of look at it and say maybe. It's just not quite there yet. It hasn't jumped its moving average, hasn't jumped. A lower low could provide it with a divergence too, so there could be a dump before the pump. But the motion itself, 1, 2, 3, 4, it's just messy. It's messy, messy, messy. And the main reason is because it's dropping one creek and looks like it's going back for another. So this definitely went below that creek. You can see it closed below it. So this is like the local creek that was established, and then it drops it. Strangely. It's like right on top of it. Who knows? I mean, maybe it's if you use this one, it's fine. It looks like it just kind of came back to it. So I don't know. Let's check it. Let's use an anchor tool. Yeah, I don't know, man. It didn't. This is really ugly because it normally wouldn't make a higher high like that and then drop low. But again, it's the same problem that Tesla has. So if SPY makes a hook here, it's going to be done. Like, it's going to die pretty fast. This would be like a reaction up and then probably start nosediving. At least locally. It'd probably go for a new low. Maybe indefinitely. We don't know. Maybe not like way, way down, but it could be. The market's really, really hungry for good tariff news. And then there was a second creek here. Sorry. So if there is anything good, this one looks like it was checked. So, I mean, that's kind of bullish. So this dropping the local creek, not bullish. Dropping the bigger one or jumping the bigger one and getting over it, making a higher push and coming down to check it, making a higher low is bullish. I guess I would say like the other, this one is more important probably, but there's still a possibility of a shoulder motion. So just got to keep on alert. And I don't know, man. I don't know if that's a bad thing either, just depending on what happens. This could still form out into a spring motion and go, but it's anybody's guess. We'd have to wait it out and see what happens at noon on tomorrow. So noon is when they're going to do it. I'm not going to be streaming in the morning. So if you guys are like looking for me, which I doubt that many people do, but if you are looking for me, I will not be streaming in the morning. Didn't you say the lower it goes, the higher it goes? Yeah, to a degree. If the setup is bullish. Does that make sense? The slingshot is a bullish setup if it does what it needs to do correctly and in the right order and doesn't do any kind of crazy stuff, sure. But you can't really say that universally that's true because, for example, there are times when it goes really high first, then it goes really low. Well, okay, that's completely different. If it goes really high first, it could be a distributive action. Going low does not necessitate some kind of massive pump. If it's a healthy bottom and then it drops low, that's good. Then it's really bullish. It's like a spring. You have to keep in mind like a range is always being tested and like tried, and this is a test right here. So it came back up to the top again, checked it to see if we want to go, and then it sold off again, and then you're going to wait and see if there's a bottom, right? So the idea now is like, sure, like if there's a spring, let's say this kind of ekes up into, this is just an idea. That's not what I'm thinking necessarily going to happen. Let's say it ekes up into the Wednesday bit, right? And then everybody's like, crap. It's not good. Well, yeah, I mean, in theory, could this just be like a spring action after that? Sure. I mean, I hadn't checked that creek. Why not? You could come sliding down and test it, and that could be a low that's okay. Did it come too high to do that? I don't know. Is the volume really high in this top? Not really. Is it high in this top? It is. This could just be a spring motion. We saw something very similar, for example, on AMC in 2021, 2020, 2021. The tops are really important because if they don't go too high, they're okay. But if they go way up high into the previous ranges and they're trying to sell through them and they're selling really high volume, it's almost always distribution. So sure, like this could be some kind of a big spring-like motion. And this is just one of those things I can't really tell you. It's not a crystal ball kind of moment. But at the end of the day, like, this may not matter to some people anyways, because you're looking at a big picture versus a small picture. I do think it makes sense to have a temporary bottom here. But I also don't know if this is the low. I think there's a huge amount of volume here suggesting that it might be coming into a temporary bottom. Keyword temporary. And that we may see it kind of move up before anything else happens. The way the market's been going, I'm just assuming it's going to be highly volatile. But it's not impossible that it's also kind of boring, you know? It may be that the shock of the news is not that big of a deal. It's kind of so-so, and it ends up being a little more regular again. I don't know. And for all we know, and we don't, but for all we know, this could be dropping to 450 before anything else happens, you know. Maybe it goes ahead and gets down there. Or it just punches through this and what I would see as a spring, but also like a later sign of weakness. Like, okay, so it pops low, goes to like 470 or something. Well, that could be like a spring that gets bought back up and starts to build out sideways. And yeah, if everybody's like, oh, it's a spring, but really it's also an SOW that's showing you like, okay, well, we want to go below there. We're testing below that trend. So we're going to eventually come back down in the future. I've been trying to do this more and more, but I think that when they make those spikes, when the institutions that be make those spikes, I think we really need to pay attention to those motions, because I do think that this might be a part of like how they're doing markers. I don't know if they're like helping other people or they're kind of helping themselves in that regard. This is a pretty important level too. It looks like this is a level we're kind of at. But it may be that later, if you see that drop and there is an SOW, that could indicate going backwards, like another potential trend here, you know, and it may already be baked in to this 1-2 back here, this little M shape from near April last year. It could be baked into that, you know. So this could end up being one of those motions of like, oh, we're dumping through these and we don't know yet, you know. Sorry. I'm not going to try to predict it 100% tomorrow. I think it's set up to go either way. I think it's designed that way. It looks, from a price action standpoint, it looks still a bit bearish, but it looks like it might have a reaction up because this could be a local bottom if it holds up, even if there's a spring. But that's really hard to predict, guys. I don't know if anyone can do it. Maybe the best analysts in the world know what's going to happen. Probably your BlackRock people. They're paid to like drive the market around. You know, I wish it were that simple, but it's not. I could see this happening too, just crazy volatile into Friday. Wolf. I've been buying Wolf. I've been buying Wolf. I've been buying Fang. Fang is weirdly just destroyed, but it also, again, it came down to this level. Like I thought it would get down here to like 125, but it's being beat down really bad. Same deal, just leaving massive gaps, kind of overdone. Just everything about it is crazy out there. So I think there's going to be a big reaction. For yeah, we'll look at LGMK for the. I know I didn't do it during regular trading hours. Wolf. Ooh, did MPW finally like crash? Yeah, it did. There it goes. Curious about that one now. Going into this April-May business. Yeah, unfortunately, this never had like a big upthrust, and so it just looks like the cat ear just finished with serious weakness, and then it dropped. But the good news is, I suppose, that the drop has happened, and I don't know if I'd question it very much. Yeah, the initial, that's like the early reaction to try to get it lower. But there should be another one that's higher up, like to here. So that hasn't happened yet. I don't think it has. Yep. So this reaction is just to kind of get as much sellers in it as possible and then try to drive the price down some more. We don't need this second line. We don't need all my little doodles here because that didn't happen. It did come down really low. It came to 3, which I figured it might. I gotten out of my position and I was like, I bought in on this low because I figured it was going to come down here at some point. Never confirmed. That's a really important thing to note, is that we had confirmations like left and right on here, never confirmed. I had them on the chart. It just didn't. Never did. So it's just important to note that, because even though like you might want something to happen, you put those confirmations on your chart so that you know like, hey, this is where it's like confirmed. It just never did. It never built out the support above 670 that we needed it to. It was that simple. So at the end of the day, like, yeah, it sucks if you were in it. I feel you, man, because I'm in some bad plays right now. And I don't like it. I do not like losing money like that. But it didn't ever confirm. It just didn't. So, you know, there's not much I can do about it. If the market doesn't go, it doesn't go. So yeah, this is going to be the big key level here, I think. There's probably 2, but this area between 6 and 675, that's where the main ear is walking through. Cannot break above it. That's what the model I had was considering like a second ear. So this is like what's happening on AMC right now, but it was considering like a second, like a massive like upward motion before this all kind of capitulates down. Instead, it got an early SOW right there, but it didn't ever do the motion. The motion was so mild, like barely comes up and then it drops. I'll be on at noon or so. But yeah, so then the next thing we'd look at Wolf this level. I'm not going to change that line. I know it broke down, but yeah, it's a little wider than I have it. So this is looking kind of ugly because it looks like it's skirting off of it instead of holding support on it. So sometimes when this happens, that's usually where it goes, right? That's the triangulation on the cat ear breakdown. It's always like the paw through the top of the second ear. Usually you can see the wave cross. It's right here. So there's a bullish wave cross right here, but it ultimately fails and then you dump. The problem is that sometimes this actually represents like a halfway point, which would be really, really brutal for this because they basically go to $1. That's bad. You don't want that. But I mean, they're just identifying that as a possibility because frankly, it's there. So I have to identify it. It is losing a trend. It's just kind of one of those bad news after bad news stocks. There's just a lot of trouble keeping people in the play because there's just a ton of negativity around it with everything going on. Yeah, so without getting like overtly too negative, do I think Wolf could go to $1? I think that's where bears are trying to go, you know. It makes sense because of the way the company, the way it changed. It doesn't, from a technical standpoint, at this place, it doesn't really make a lot of sense to me, but that it would go all the way there because normally this ear would be like a halfway point, or this paw. So I would be a bit confused as to why it would go down that low. I kind of think that the lowest it should go should be 50-50 here, at least for now. So I think there may be a rally. It's very close, guys. It's like right above it. I think there might be a rally. It might even be close enough that it doesn't go any lower. From $2, like this is the more typical S curve is what I'm trying to say, not this down. That there would be some reaction here would make perfect sense to me. Where does it react to? Probably just back up to the top. I think I already have it on the chart. It may not be till after earnings, though, which is on April 30th. So if I had to guess, I would say this has a real automatic reaction to like 340 and then builds out like another sell down till earnings. Maybe goes lower, maybe just double bottoms, something like that. Could have like maybe a LPS, but just based on that creek, it's got to come back down on top of it. So I think it's going to do like a big pump here, like up to like 350, which is still a big move. I mean, that's 60%. That's a big move. And then I think you're going to have it slump back down April. I'm not sure if earnings can like by itself turn it around, but maybe they'll have some other news. It's just what I would expect based on the way this is setting up. Big 50-50 up. That's an auto reaction. And then come back down, hit a double bottom, and then head back up towards 472 maybe. And that probably is your May, June kind of thing. So if it's bullish, typically the way this happens is that you get a double build out over the middle. Middle liquidity is right here at 265. And then it would break out and then go up that's the 15th of May, which makes sense. This may end up being like a real squeeze moment for the stock. That's really high, so grain of salt with that, but it's possible because there's an angle here that was left unaccounted for, and this does happen. And a lot of times you'll go back to that. This looks like June, so June 5th through the 23rd, that region. And that's the area that we said it probably comes back to. So there's a pretty strong triangulation here. So, maybe it's like a halfway point. It hits like in May and then it kind of comes down. It has a secondary move. Don't know. If it doesn't get there, if it doesn't even make this first move, then I'm going to think of it as like a pivot, like a low. Because that does happen as well, where this becomes like a pivot point and doesn't go anywhere until June, July. You could have a really nasty, unexpected kind of backwards version of this. So it's not like a guaranteed play. We always want to have like massive squeeze plays, and I get it. But there's a lot of unknowns. Let's check one more thing on Wolf. Let's go back to 2017. Yeah, I mean, it's already kind of going opposite. It's probably best to associate it with 2022. But that year also a bit different. It's not always the best, but it does look like there's a continuous build out. It's like not always the highest buy-in, but it does seem like there's a pretty strong chance that this is an upward motion. You can see like the downward motions all kind of average here in a similar area. And then there's an upward motion even on the downtrends. There's like a push up. So it's going to be kind of weak, but there is an upward motion that trends into August to mostly August. And then it looks like it goes down again into October, November. There's not a lot of consistency from then on. It looks like if you bought this almost every year, if you bought this in like end of October, you'd probably be okay if you didn't hold it too long. But it's not a really great chart in that way. So, and obviously this year is pretty different. So let's go to 2022. That was a down year. Let's get rid of the percentages. Let's just take a look, or let's do percentages. So yeah, this is consistently going low into May. So there was a moment right here, you can see on 2022, there's a secondary upthrust that happened at the end of April, and then it capitulates down into May. These others have something similar. You can see the build out, and then there's a similar pump in April. And it goes down. Looking at all of these, this one also has a pump into late April, and it goes down. So it looks like mid to late April, there's usually a pump on Wolf, and then it typically is down into May. Then May up until about with this being an exception last year. May to June looks pretty good though, usually upside. Potential to go higher. Weirdly, on the 2022 year, which was the down year, it continued up until September, October. This is a consistently low, kind of low zone from November on. So November is a good buy period, potentially, if you think the stock's going to go up the following year. These have all been trending down, so it wouldn't have been beneficial to do that. And then it looks like January has been, consistently pretty high. But I can see like the waves are kind of following the same route. It's not perfect. They're similar. So yeah, it looks like July. Maybe if it's kind of the off chance that there's an upside, maybe into the fall. But it does look like maybe mid-July. So anyways, I just wanted to check that, just see if there was any yearly. There's not really much there to look at, but so it doesn't seem very consistent to think this goes up into June. Let's just put it that way. What seems to be more consistent is that this might pop going into April and then potentially continue down. Especially if it's bearish. I think you get the auto reaction and probably have an SOW, which would be a new low. But then it does seem to be that, you get kind of a rise in the summer. So this might be somewhat okay. Like as a guide, this arc right here. But I didn't see anything that made me think that it had to be at a certain time. We'll do a reverse paw here and see. So this actually supports the idea that it would come back up by then. But I think April you'll have a pump and then a drop before it happens. So man, what a crappy day. What a crappy 2 weeks. What a crappy 2 months. I'm really annoyed with myself because I tried to flip bearish this morning and I would have made a fortune on those calls or those puts. I needed that. Now I'm running on hope, which is never good. I think I'm going to get screwed. Screwed. It's over, man. I don't know, guys. I don't know if I can keep doing it. If it's like this bad all the time. And I know this is like a weird thing. It's not like a normal time in the market. Trying to give everybody a little bit of grace because I know that, myself included in that, because I know that this is a very like ridiculous time to be in the markets. It's unprecedented to be down as low as we are because of completely level-headed thinking. Like at least awareness. Like this wasn't like some random COVID event. This was like people made decisions and it dropped the market. And I just think it's absurd because I'm pretty angry about it because there's just no remorse, like nothing. I just don't give a crap. I'm like, man, you're killing. It doesn't matter like what good you think you're doing at the end of the day. Like there could have been another way to do this. The way they did it, just crushing the it's not about party lines. It's just about money like when we're talking about the market, and you destroyed people's investments like retirements. You can hold on to it, maybe you'll be all right, but I guarantee you there's a lot of people that are going to be reeling, you know. Everybody's urging people to not sell off, but I'm like, well, obviously people are selling off. It must be happening because we wouldn't be where we are unless people were selling or shorting, which means a lot of people are losing a lot of money, trillions and trillions of dollars. I'm angry because my timing was just wrong. I knew like certain things were likely, and I just did not time it right. And that's it. I mean, that could be all it takes. Yeah, I mean, I don't know. We've looked at this before. I don't think it's necessarily a bad trade. This to me looks like a bottoming action, and you can see that the MFI, which is volume weighted, is caught up finally. So this still looks like bullish divergence potentially. You know, it's missing like a little bit of that rebound. It just didn't happen. This is probably where we thought it was going to happen, and it didn't happen back in March. Yeah, I don't know. I might just get another job. That's that simple. Start rebuilding my son's investments for his college fund. They didn't get hit too bad. I guess the stuff that I bought was okay, but it was like, it's still down. And, you know, what goes down eventually probably comes up, but if this is going to take years to recover, I'm not going to sit around and wait here for years, you know, either. So I'm just really, really ticked off. Oh, I know, like the billionaires out there are all buying like crazy when it hits bottom. But you might say, well, you could have done the same thing. You could have went all cash. Yeah, I don't know. Maybe you just listen to Warren Buffett. Everybody loves Warren Buffett right now because he was smart with his 90-year-old wisdom and billions of dollars that he's going to die with. Like, I don't know what he's going to do with them. He's a really smart guy. That's all I can say. He saw something and he said, you know what? Let's just go all cash or whatever, or mostly cash. Yeah, I don't know, man. It's pretty random. It looks like it's just in a free fall, and yeah, this is much the same, actually. There's bullish divergence all the way down. So like it's been walking down here, and I'm like looking at the other chart back and forth. I don't really know why it wouldn't have some kind of reaction. But this has happened before here where this reacted all the way back up and it just never really did anything big. So in order for this to have like a really big pop, it has to have a reaction that's also breaking out. And we're triple bottomed here on MFI. So there's a lot of oversold crazy. No, I haven't covered GM. I mean, I covered it earlier a little bit. Yeah, I'm not so sure about this one. I mean, we looked at it before. There's certainly possibility here, but even if this broke out, I'm not so sure it would come back very far. Like, I think we would be fortunate if this came back to like 19,019. I could see that reaction maybe. Anything can happen in the market, man. But it's true that's a possibility, but like that reaction doesn't in a bearish market does not look the same as it does in like a bullish rebound. When you have like equal parts liquidity, you're going to get those big auto reactions that usually happens because bulls are sitting there and then you get the squeezed motion and all that junk. Eventually, yeah, shorts will cover some of these positions, but if they're just buying and selling quickly, I mean, it's never going to look like anything crazy. It's going to look like moderate buying is happening. So it really depends a lot on, I mean, there's a number of things, but that's up at like 17.17. Yeah, it just hooked. It dropped right here and it failed to go back. So it just got crapped on in April. So that's a bummer. Don't know, man. Trend is usually going to be whatever it is till it isn't. So the reason I'm like kind of whatever ho hum on this is because there's no way to know at all with something like a penny stock if a divergence really results in much of anything. It could be explosive. I mean, you've picked out some yourself and we've looked at them and it goes from like 20 cents to $1. You know what I mean? Like it could be like this explosive move, but it does feel a lot like rolling the dice because there are times where we've picked on other ones where it's like it just never did anything, you know, and the reactions are sideways. So like an equal part reaction to check that trend, yeah, you go like straight up here. And what I do is I look at stuff like this and say, well, that seems possible, you know. Maybe this is going to build out because this is the 11th. Maybe we're going to see some kind of market-wide rally into the weekend, but it's also possible that that's just a triangulation that's ultimately about, I mean, it's kind of strange to say it, but it's like a protractor where you're kind of measuring around a point of potential interest. And I just don't find it to be highly reliable. I wish they were. And it's true, like sometimes it's like right to it, you know, but then other times it's just wrong, completely backwards. I wish I had the answer. I've not quite figured it out yet. So maybe this represents like a mid to low middle. But even that, it's like this kind of makes you think it's going to go flat, but we don't know that. You know, we don't know that this ever goes, you know, it could represent so many different things. This could represent a high, low period, like a wave that's actually down here. That does come up, but it comes up and never really leaves, like it gets stuck. So if I were looking at this and this were any old stock that had like a really good market cap and all that stuff, I would be like, yeah, this is totally bullish right here. Super bullish. But like it's not. So I said it's bullish if we hold over 0.015 and reclaim 2.1, but we didn't hold over 1.5. We lost it. And 2.1 is the top, so I had an alert there. Yeah, I mean that, to me, that cross up would be pretty guaranteed, like bullish price action if it can get up here. Yeah, but that's like a big if. That kind of a reaction would warrant a decent move, but this is also stretched out now, so again, like you might see something like that, but it could be way later on and do so in like a downward manner that's not really expected, you know. We could see something like this where it's like, oh, it did break out, but it did it way over here and pops 100%, but it's way later, you know. I just can't tell you that. It's not possible. And I could spend 100 hours on a chart and still get it wrong. It can help to give you more information for sure, but we're looking backwards at these kind of areas, like kind of thinking like maybe this is like a massive double sell down that has a pretty big reaction, and I don't think that's unreasonable. But I don't know. The future of a stock is uncertain. Stocks go bankrupt and companies, I should say, go bankrupt and things like that happen. Last time this got this low was before this earnings, and I think we looked at this last time. And it did rebound, and it had quite large moves. But it did sell off for a long time before it got there. So you'd be trying to like catch a bottom. So yeah, I mean, it kind of looks like a giant version of this right here, doesn't it? It's similar. There was a big upthrust, and then it has this like slumping cat ear, and then it has a big S curve down. So it's pretty similar. Timing's even pretty similar on that. Like I said, I don't think we're in like a spot that, to me, it's like, yeah, it looks like this, it could be ready to go pretty soon. The timing on that looks fairly 1-to-1 even, but it's yeah, I think 0.29 maybe. I don't know. It's just not, there's no perfect answer here. If you were just looking at that, you'd think that this is going to have some kind of a real bottom and then sort of walk its way out like this. And then it would distribute over here and probably start crapping out again. Thereabouts. So, I mean, you're looking at maybe April. This is some hopium, but it's there. And this could be a way of kind of avoiding, I a real breakout, you know. You could have a big pump to like 0.26 without actually holding over that creek. Start a SOW here or something and then sell back down later. Yeah, I would just say this week, tomorrow I'll be here around noon, and then I mean I'll try to be back earlier. We'll see. Maybe I got a meeting, so I'll be back around with someone around lunch. So I gotta go to that, and then I'll be back. I might be back before then. That's pretty much when everything's hinging on anyways. Is these tariffs going into place at noon. So noon on the 9th. So it'll be a big day tomorrow. So the second half of the day will be very different than the first half. More than likely. Unless there's some kind of news leak. So that's what I would say. I will be back at that time. I do appreciate you guys hanging out. I know this has been a rough ride, and nothing I say here is meant to discourage anybody or encourage you necessarily even to trade something. When I have my own problems, I have my own problems. So, you know, I'm not trying to put those on anybody else. But, you know, at the end of the day, like, I can do what I do if I do it well. If I don't do it well, I can't do it. So there may be changes if I don't know, man. Like, I'm just really, my confidence is really shot right now. I'm just really irritated by some of the stuff that's gone on, and China's is at midnight tonight. Well, China's not been acting very friendly, so I'm not sure that that's going to be positive news. But I guess if their tariffs go into place first, we'll see. I don't even understand the reciprocal tariffs. It pisses me off. I'm not going to lie. I was pretty angry when I saw that formula and I understood what they were really doing. They were doing trade deficits, and it doesn't make any sense to me to do that. It just doesn't make any sense. Like, I get why you want to make it be kind of equal, but the idea of free trade and fair trade is not that you're always going to get the exact same amount of money inflow and outflow. You might get less from one and more from another, but that doesn't make any sense. Like, why would we get the same amount of money from a really tiny country and then expect that they're going to only get the same amount from us? Like, it doesn't make any sense. I just don't see why that would be the barometer. Like, and it's not reciprocal tariffs, it's reciprocal something, but it's not tariffs. You know, he did it based on, this is why the market reacted the way it did, because he basically said, it was reciprocal tariffs, and that would imply that if they charge you 15%, you're going to charge them 15%. That's irrelevant. That has nothing to do with, in some ways, how much. Because, you know, that's the dollar value of like how much you're actually importing and exporting. But to take a trade deficit and then use that as kind of like a tax to try to balance it, that doesn't make any sense to me. I just don't agree with it. I mean, maybe it makes sense to you, but the whole thing has been one big poop show, in my opinion. And at the end of the day, do I think that America should be able to have free trade and not be tariffed or taxed for goods way beyond what we're doing in reciprocal? Yeah, I mean, I think it's totally fair, but I don't think we should have, like, we only charge you 12% and you charge us like 50%. Well, that doesn't make sense on the dollar, right? But the idea of like having it balanced as a number value, like we have to have the same import-export value with a country, it doesn't make sense. And he's already rejected, to me, it doesn't make sense. He's already rejected zero fee, 0 to 0. Like he did it already. It was the UK or somebody was like, hey, want to do 0 to 0? And he's like, no. And he did that because he's like, well, it's years of, what he calls abuse. And he's like saying, oh, it's years of unfair trading. You can't make that up in a 0 to 0. But I'm like, yeah, but free trade is free trade. Then the burden's on you. It just feels like he's squeezing everybody in the world to give him like the best deal possible. I get it. I do. But I'm also not naive. Like I know what he's trying to do. But I also think it's just kind of ridiculous. To the threat of your own country's financial well-being to do that, I think is a bit harsh. There could have been a better way to do it. But I guess that wouldn't have been his way, right? I would have just gone to every country that I wanted to go to and not necessarily fly there, but just invite them to come talk and say, hey, this isn't equal. If it's not fixed, if we can't come to an agreement, this is what we're going to do. It's kind of embarrassing. Oh, well. I'm not going to keep going on that. I'm done. Appreciate you guys hanging out. I will talk to you all later.